My name is Kester Shimonya Mohanji. I'm a marketer by profession and now an entrepreneur. I run a company called Aquila East Africa. Aquila East Africa is a marketing and communication agency. We deal in anything to do with advertising, public relations, experiential, and of course digital communication because of what is going on in this age. Yeah, we've been in existence for over 10 years as registered, but actively we've been in existence from 2018 towards the end of it. So about 5 years of hands. My name is Kester Shimonya Mohanji. I'm a marketer by profession and now an entrepreneur. I run a company called Aquila East Africa. Aquila East Africa is a marketing and communication agency. We deal in anything to do with advertising, public relations, experiential, and of course digital communication because of what is going on in this age. Yeah, we've been in existence for over 10 years as registered, but actively we've been in existence from 2018 towards the end of it. So about 5 years of hands-on experience. My story is a bit long. I started from corporate, actually started from media, then I went into corporate, and then I went into my own business, started Aquila East Africa. And there was a lot of challenges because I had no entrepreneurial experience. Yeah, so having come from corporate, I knew nothing about particularly cash flow management, reading financial statements to a certain level, things to do with legality of, around business, best practices when it comes to running business and so on and so forth. So I struggled in my first year of business until I met a friend who had done the same course. So I saw the way he was performing, and coincidentally I met a second one who had the same testimony. And that's when I decided, let me give it a chance. I think my biggest challenge was cash flow management, where I probably would make some money and then use it inappropriately, and then by the time the next business comes, we are not able to. And I think the biggest benefit I got from this program was basically cash flow management. Apart from that, of course, things to do with proper reading of financial documents, business risk mitigation. Those are things that we never think about, and again, I would just say best practices as far as running an organization is concerned. So things like strategy and planning and how to get into new markets and so on and so forth, which has helped us grow to what we've become. I keep on talking to people that by the time I was joining this class, I was a one-man show working in a dining table in the house. When I joined EDP and interacting with people, I learned that it's good to work with a team. So I recruited 2 people, an accountant and a social media manager. And the first thing the accountant did was put me on a payroll because I used to use my money anyhow. There was no difference between myself and the business. Yeah.
Good morning. Good morning. Good morning once again. How are you doing today? Welcome to Strathmore University Business School. Nelson is my name. I'll be your host for today's event, assisted with my able colleague Eunice Kimani. So at this point, I'd like to welcome you to Strathmore University Business School. The washrooms in the business school Where we are at, the gents are towards my left, the ladies towards my right. Kindly ensure you utilize the sanitization points that we have in place. So today we are having the Fintech breakfast, whose theme is exploring Fintech ecosystem and the future of finance. So our keynote speaker, Kevin Mutiso, the chairman, Digital Financial Services Association, the executive dean, Strathmore University Business School, Dr. Caesar Mwangi, members of the management board present, our live stream sponsor, Chama Soft Limited, our partners in kind, Standard Media Group, distinguished panelists, our convener, Eunice Mudhoni Kimani, head entrepreneurial programs, our guests, ladies and gentlemen, good morning once again. At this point, I'd like to welcome a gentleman who has a PhD in organizational performance and change management from the University of Johannesburg, an MBA in strategy and corporate finance from the Wits Business School. He is an avid hiker. He has over 25 years of experience in management and leadership in various roles. His previous experience includes stints as management consultant with Deloitte and Touch. He is currently the executive dean of the Strathmore University Business School. A round of applause to Dr. Caesar Mwangi to give the welcome remarks.
Thank you, Nelson. This gentleman is called Nelson Mandela. He's a great guy, he works here. Good morning, ladies and gentlemen. Yes, I'm so delighted to meet all of you, and can I suggest all protocols observed? Is that okay? Very good. I really would like to welcome all of you to Strathmore University and Strathmore Business School this morning, and just to give short welcoming remarks to the very distinguished visitors we have here this morning. As was mentioned, my name is Caesar Mwangi, and I have the distinct pleasure of being the executive dean of this business school. A wonderful place to work, where we do our best to meet the vision that we have. A very simple vision, but a very critical and important vision. The big vision is really, and we state specifically in our vision, that we want to transform the African continent. And we talk about the African continent because this is where we are domiciled, this is where we are, and this is the continent we love. And unfortunately, it has not achieved its full potential. But we know through the work that we do and through people like yourselves who participate in some of our programs, we shall transform this continent. Are we together? Yes, we shall. It is our place, and it has great, great potential. And our mission talks about transformation through the people who come through these programs and go out and transform their spaces. And the fintech spaces is one of those very critical spaces. And that is why I'm so, so delighted that this event is taking place and you have graced the occasion with your presence, okay? So I have a few remarks which I just jotted down, if you don't mind. Because I do understand that the aim of this breakfast meeting is to explore the current state of the fintech ecosystem in Kenya and find ways in which we can collaborate to achieve an inclusive and sustainable future. Inclusive and sustainable future. That is fantastic because it talks to the transformation agenda that we have. If we can collaborate, we can really contribute to a better space for all of us and make it inclusive and sustainable. The future is there for us, and therefore we are looking to the future and seeing what can we do to make things better through fintech. So there are various changes to the industry, as you're all aware, because this industry has been growing exponentially in recent times. And having a background in change management, myself, I am very interested in this industry because these are the changes which we need to ask ourselves as they change, how can we adapt quickly and adapt the necessary ways of working through the changes in fintech. These changes, of course, driven by technological innovation. A very beautiful, beautiful concept, innovation. we are no longer in that space where we say we are settled, we are okay. No. In fact, I recall when I came to this business school some months back, every time I meet somebody, they ask me, have you settled? I mean, how can you possibly settle in a place where there are so many interesting things going on? Is it possible? You don't settle. You keep on innovating, learning, understanding, recreating. And that is the fintech space. You cannot settle to a routine. You cannot. And that's why this breakfast is so important, because it is part of that being unsettled. Because we have to continuously innovate. So these changes are being driven by technological innovation and a fast-changing financial landscape. It's fast-changing all the time. And those who do not change, this thing seems to be fading. Again, we need some innovation here. Let me pick another one. Hello? Mandela, the microphone here is not working. Can you hear me? Yeah, so let me raise my voice. You can see even technology fails and we have to innovate and raise the voices. Very practical application. So we're saying these changes are driven by technological innovation and a changing financial landscape. We also have an emergence of new players. The proliferation of mobile money. Yeah, in this country especially, we are all using mobile money. We no longer carry cash. The advent of blockchain technology, and these are just a few examples of the ways in which fintech is transforming the financial services sector. So you can imagine there's so much to be done. But with this growth, then comes new challenges, but most important, new opportunities. Okay, opportunities. There is issues of regulation, policy, these issues of collaboration, which will provide new opportunities. And I think this is one of the things that we really want to talk about. How do we collaborate better? And we want to achieve a very clear outcome at the end of this engagement, because we want to engage in thought-provoking conversations. We need to provoke one another to think differently. We want to explore the current outlook. We want to identify areas of intervention that will enable us to build a more vibrant, a more sustainable fintech ecosystem, because we work in an ecosystem. We don't work in silos. How can we work in this ecosystem more efficiently and contribute to greater value for all the ecosystem players? In the process, we then have our vision. We all contribute to the transformation of this great continent, this great country, for the betterment not only of ourselves, but future generations. I hope that this is going to be the outcome that we get in the long term, and I also hope that we can have more engagements such as this. I think Strathmore Business School will stand there to support these kind of engagements. With those few words, ladies and gentlemen, thank you very much. God bless you. Have a wonderful event this morning. Thank you very much. God bless you.
Thank you so much, Dr. Caesar, for your insightful words. And these will lay what we will discuss today. And I'd like to just leave you with a quote. People need banking, not banks. Said by Ranjit Sarai, President of Presidential Choice Financial. And I think the panelist and the keynote speaker will align to this. So at this point, I'd like to welcome a gentleman who eats, sleeps, dreams, and plays fintech and entrepreneurship. He subscribes to the seventh generation and mission, and his mission is to play his part in ensuring Africa is the most modern place on earth by 2050. He is the chairman of the Digital Financial Services Association of Kenya, formerly known as the Digital Lenders Association of Kenya, and he has steered the industry through very challenging times and has been able to position the industry as a potential growth area for the country and a standard for financial inclusion in emerging markets. He targets OE to achieve 50% insurance and pension coverage in the border sector by 2025. A round of applause to our keynote speaker, Dr. Kevin Mutiso.
Um, I prefer giving a talk in a conversational way. And the reason for that is so that I tell a story instead of giving you facts and figures. And so today I have 30 minutes. In fact, let me just set my timer so that I'm on time. And I will basically tell you the story of Fintech from the beginning to where we are today and where we are going. Before I start, I'd like to thank Strathmore Business School for inviting me. For me, this is an honor. I always tell people I grew up in Strathmore Business School. I did the owner-manager program in 2012. And the difference between the Kevin who entered in January and the Kevin who left was a big change. I dressed different, I talked different, I thought in dollars. Wanjiko makes fun of me all the time. And that transformation for me was life-changing. On the panel, I'd also like to thank the panelists, Kamau, Rose, Wanjiko, and Devine. People like Kamau and Rose, we started in the industry a long time ago together. Some of them were a little bit ahead of me, and I'll tell you parts of their story. And you see the integral pieces and parts they played in making the financial fintech space what it is today. And so I hope when we get to the Q&A session, you ask them tough questions about now, but also then. What is fintech? Before I start, what is fintech? I like planting a seed in the audience I'm speaking to. And it's a pleasure when you hear the dean speaking about the transformation of the continent and, of course, Kenya. And the seed I'd like to plant is one of that positive sum game. Let us build a bigger pie that we shall share rather than focusing on the small pie that we have today. And the way you do that is by having a shared objective. And being a digital financial services person, the shared objective that we should all have is making Kenya the global digital financial services hub of not just the region, but globally. That way, individually, we get wealthier. As a society, we get wealthier. And of course, we all do better. So what is fintech? Fintech is also known as digital financial services, TechFin, technology financial services, and those words are interchangeable. And the main way to describe fintech is anything that was done in the traditional way in financial services is now being done on a digital platform. What do I mean? In the old days, you'd go into a bank, you'd fill in a form, they would do KYC verification by looking at you, and they would basically put money in your account to give you the loan. Today, all that happens on a smartphone. You don't need to go to a place, you don't need to fill in a form, and you don't have to wait for money to be sent to you either in cash or into your bank account. It comes direct into your mobile money wallet. But where did this journey begin? And I like to start from the beginning so that you get the context and the nuance. I believe the third greatest invention in the history of humankind was money, which is where this all began. What money did is it made capitalism more efficient because you could exchange value and store value in a more efficient way. Let me give you an example. If Brian Dempsey here had cabbages that he had farmed in his farm, and he wanted to exchange some of those cabbages for protein like meat, before the invention of money, you'd have to find somebody who has meat to offer, and they would have to do an evaluation of how much meat equals how many cabbages, and they would exchange. And you can see from that transaction how inefficient that is, because Brian would have to find someone who has meat to offer. Today, with money, what you need is somebody who wants the cabbages. You exchange value at that point, and then you take and store your value using the money and go to look for somebody who has meat, and then you exchange it for the meat. And so that's the beginning. The second point is what I think is the second greatest invention in our human history, which is debt. And I know people don't like that word debt and they don't like loans. But debt is basically future value being captured now to create value. In simple terms, it gave the creators and the innovators an opportunity to start building and creating value before they had to accumulate value of their own. So it sped up the process of value creation, right? Now we fast forward, we're now in Kenya. It's 2007, and M-Pesa is rolled out in Kenya. And what M-Pesa did, it allowed us to move small value tickets to each other and to vendors in a very cheap and affordable way. If you remember before M-Pesa, it used to cost about 900 shillings to do a bank transfer. As a result, you would not want to send 10,000 shillings or 5,000 shillings. You'd go to tea room. I used to go to tea room, give the driver who goes to my shosho's village, my grandmother's village, the 5,000, and then it would get to the other side through the driver. M-Pesa solved for that, right? Then comes 2011, which the greatest invention now comes into play, which is digital lending. And many people might argue with me, but if you really think about digital lending, it's a revolutionary thing. Because I've been a lender for over 17 years. And when we used to lend back in the day, it would cost us at minimum, 7,500 shillings to lend out any amount of money, because there was the cost of verification of the human being. There was the actual admin cost of all the different documents you had to place, the legal fees, blah, blah, blah. And that meant that it was impossible to give small ticket loans. It was impossible to lend 2,000 shillings. No one would take a loan of 2,000 and pay an application fee of 7,500, right? And so the reason I genuinely think it's the greatest invention in humankind, in our human history, is that we now are able to lend as little as 500 shillings, and it costs us shillings to do everything that is necessary to determine if you can give the loan or not. There are three things that we look for when we're lending as lenders. The first is fraud. You want to know, will you get your money back? Right? Right or wrong? Right? The second thing is you want to have an idea if the customer can repay the loan. So it's called ability to repay. So you're looking at transactional data to determine, can James or John or Susan pay this loan back if we give it to them based off the cash flows we can see. And so in the old days, you gave your bank statements. Today we use M-Pesa statements. And digital lending figured out how to scrape SMSs from your phone, delete the text, look at only M-Pesa messages, create a ledger in our back-end system, and determine if you're eligible to get a loan for as little as 500 shillings. And then the third risk is willingness to repay. Now, this is the biggest risk in lending for a first-time customer. After fraud, once you've solved for fraud, the next big thing is, does John pay back his loans? If I give John a loan, does he pay them back? In the old days, what used to happen, if you go to some of the smaller towns in Kenya, you remember that the bank manager knew everyone and everyone knew the bank manager. The reason for that is that that was the willingness to repay check. Mr. Bank Manager would call, a vendor, so-and-so has come for a loan of 10,000 shillings or 200,000 shillings. We can see from the bank statements that he's your customer or you're his vendor. Does he pay his bills on time? If the answer is yes, the loan would be given. If the answer was no, a tough conversation would be had. What's my point? My point is that today we've got the thing called the Credit Reference Bureau, which is a central database that allows us to see your willingness to repay. And that's why it's important for people to take at least one loan in their adult life and repay it back, so that there's a record of yours in the CRB that says you've paid back a loan at least once. The reason for that is very few lenders are willing to be the first person to give you that first loan. And it's important that you see that importance. So today, we are able to give loans for as little as 500 shillings. So I was telling a story. We're in 2011 now. Mshwari has figured that out. When Mshwari was launched, it made sense to me and many other ecosystem players, because to do a fraud check, they already had all the subscribers. So it was very easy. They could see this person has used this line for 6 months. Probability that the fraudulent is low. So it made sense to me. The ability to repay, they had M-Pesa. They could see that I had transactions of 100,000 shillings every month. They could see other people had transactions of up to 1 million shillings every month. So taking a risk, giving them 10,000 shillings, didn't mean that much. It made sense. And then, of course, they were able to do a guesstimation of willingness to repay. If I have 500,000 shillings flowing through my M-Pesa statements, why don't I just give John this 5,000 shillings? If he repays, we'll recover the money from his... If he doesn't repay, we'll recover the money from the transaction fees over time. It's not that much. He moves a big volume. And if he doesn't repay, we now know he doesn't repay, but you could justify that first loan. Let's move over to 2012, 2013. And the Credit Reference Bureau is born. Regulations are issued by the central bank, and we have the first iteration of the CRB regulations. And in those days, only negative data was put into the bureau. In fact, this has created another problem for us in the industry, because over time, what has ended up happening is Kenyans know the CRB as a blacklist, whereas it has now evolved into basically a list of your credit behavior. It just tracks how you manage your credit. So if you have 10 loans and you pay 10 loans every month, the bureau knows you have 10 loans and you pay those 10 loans on time every month. If you have 5 loans and you pay 2 late and 1 a bit, and you never paid 1, and you have 3 that you're paying on time, the credit bureau tracks all that data. So that's how the credit bureau began. In those days, the big challenge was, are we going to be able to populate the credit bureau? Will banks use the credit bureau? Will SACCOs use the credit bureau? Will microfinance banks use the credit bureau? And what ended up happening is we all, as lenders, saw the benefit of the credit bureau and allowed ourselves to submit and pull data. And then the magic started happening. In 2014, a company called Mkopo Rahisi launches the first smartphone app-based lending product. Now you're wondering why I think it's magical. Because I couldn't understand how they were doing fraud check. Because I said, I'm a lender, I've been lending for 17 years. I understood what Safaricom was doing. What I didn't understand is what is Mkopo Rahisi doing that we don't know. Because if you remember those days, Safaricom wasn't sharing data. And so they were obviously not doing any verification. They just gave the loan naked. The second thing is, how did they get transactional data? In those days, I didn't know you could scrape the smartphone and decide, pick M-Pesa data from the SMSs, but it was a question, and they had figured it out, right? And then, of course, willingness to repay. At the time in 2014, Kamau just reminded me, there were 700,000 records on the credit bureau. And so my question was, how did they target customers? Because they must have found a way to know the 700,000 from the rest of the Kenyan ecosystem. And that was very mind-blowing to me. And in fact, 2 years later, I founded a digital lending company because of all the research we had done as a result of that question. I actually remember the day and where I was when I got that marketing SMS from Okopo Rahisi. Because I was a lender and we were looking for growth in our business, when we got the SMS, we were like, this could be it. Because if we figured out how to lend 10,000 shillings to 100,000 people, would make a lot more money than what we were doing at the time. And if you remember, the interest rates were also quite, they were healthier. We're now in 2017, and Microsave releases a report that states that 2.7 million Kenyans are negatively listed on the CRB. This again continues to confuse the Kenyan. And at that time, the CRBs and the ecosystem tried to start educating Kenyans that actually you've got positive data being reported into the CRB. It began in 2014, and you've got negative data being reported. Come 2018, and I think the best product that has ever been designed, I know a lot of people are going to disagree with me on this one, but Fuliza is launched. How many people use Fuliza? Be honest, I use Fuliza all the time, right? Fuliza is easily the most profitable product in the digital financial services industry. I'll give you just 3 statistics. They lend over 1 billion shillings a day. They charge about 1% for the loan. And after 90 days, only 2% of the loan book has not been repaid. So if you do your quick math, that tells you how profitable that product is. But then if you do your quick math, it also tells you how much volume is moving, because that's about $3.6 billion being lent out every single year through one product. Now, what's happening on the regulatory space? Because we're coming now to where we are now, 2023. So before we get there, let me also speak about where we are in the regulatory space. In 2012, of course, 2013, CBK releases the CRB regulation. 2014, CBK releases the payment service provider licensing. This is the one that regulates M-Pesa and Airtel Money and all these mobile wallets. In fact, I think Devin is under this regulatory ambit as Cellulant. 2019, we have the Data Protection Act that enshrines data privacy into all digital businesses. What's my point? My point is the policy makers, were trying to solve this problem too. They realized that they too had to start being more innovative, more progressive, and try to manage the regulation so that it doesn't stifle innovation. And that's why we are where we are today. If you think about that evolution, I've just spoken about up to 2017. It's remarkable. Before 2017, 10 years before, the industry of digital financial services literally did not exist. It was zero. It had nothing. It had no one working for it. The only financial institutions at that point were banks and microfinance banks and Shylocks. 10 years later, you've got Fuliza doing 1 billion shillings a day. You've got Mshwari. You've got over 200 digital lenders. You've got about 5 payment service providers. You've got M-Pesa that has reached 60% penetration in country. And that remarkable growth is something we need to be very proud of as a country. So now we are in 2021, 2022. And I'm sure we all remember the famous campaign promises that were being made. Oh, there are 14 million people in the CRB. we're going to remove them, bottom-up economy. Others were saying, these lenders, they are too expensive, blah, blah, blah. But what that told me as a digital financial services player is we now have 14 million records on the Credit Reference Bureau. And because I knew that both positive and negative data was being submitted, that was a very good sign. So by 2020, Kenya was the fourth best data. I think it was doing business report. We were ranked fourth in the world for data credit information sharing mechanisms. Fourth in the world, first in Africa. Then something happened in 2022, November. Hustler Fund. How many people have used Hustler Fund? Very few. I'm disappointed. Hustler Fund is a brilliant, brilliant product. Why? The Hustler Fund solves for a thing called the first loss risk. If you remember, I said that one of the biggest challenges in lending is that the first loan you have to give out is usually the riskiest because you don't know if this person is going to pay you back, right? Now, you've got the government giving you at least 500 shillings to demonstrate to everyone else that you pay back loans. And they're charging you 8% per annum. It's the cheapest money in the country. Even the government doesn't borrow at 8% per annum. Right? So if you're genuinely in business, you should be using Hustler Fund like crazy. I'm on my 10th Hustler Fund loan. I have saved over 550 shillings. My limit has moved from 950 to 1350 today. Right? At some point, no, that's a big deal because I'm getting 1350 at 8%. Even government doesn't borrow at that rate. If I continue taking it and I get to a limit of 100,000 shillings, at some point I'll have access to 100,000 shillings at 8% per annum, right? And I will have savings that I can access at some point in my future. They say it's a pension, which I believe, by the way, and I hope that they keep their word, that I'll be able to access that savings at a later date when I genuinely need savings because I'm an old gray-haired man. So Hustler Fund was the next big thing. Hustler Fund will take financial inclusion to the next level because it basically solves for that bottom of the pyramid piece. Those people who would never have gotten loans now will be able to get loans. And if you think about the objective of capitalism, which is to get capital to those who need it, what the Hustler Fund has done is that it gives every hustler entrepreneur at least 500 shillings to start some game to make money. And that's a very important thing. And I know the argument is, 500 shillings is too little, blah, blah, blah. We had to start somewhere. We are not Switzerland that has bucket loads of money. We had to start somewhere. And the example I like to give around Hustler Fund is in 1954, the US started the Small Business Administration Fund, which is exactly like Hustler Fund, but in 1954. So none of the digital aspects of it, but had all the elements of trying to get the money to the bottom of the pyramid and to those entrepreneurs who had innovative ideas so that they could start building something. Today, let me shock you, that same fund was the fund that gave Apple their initial capital of $12,000. Today, Apple is worth almost $2 trillion. So just to make the point of, we needed to start somewhere, 1954 to 2023, so we are many years, 70 years behind, but we're many centuries ahead of our peers, and I know it's not good to compare yourselves with the bottom, but I think as a nation we need to basically pat ourselves on the back for how far we've reached around this issue of financial inclusion. So I guess the next point is, Where are we going? What's the next frontier? What does the future of fintech, finance, DFS, digital financial services look like? And the answer is that you're going to get very highly personalized solutions, and you're going to be getting financial services when you need them. It's called embedded finance. And today I want to give you a bit of a summary of a business that I work in to explain how embedded finance works and why, and how sort of give you a glimpse into the future of finance. In the old days, if you wanted to set up a bank account, you basically walked into one of the 30, then there were more banks, today there are 38 banks, and you basically opened a bank account, you all filled in the same form. There was a question that would ask sometimes, which industry are you in? But if you worked in banking, you knew no one really looked at that. They were more interested in your deposit and your cash flow within that bank account. The company that I'm talking about is a company called Oye. And what Oye does is that it seeks to empower the boda boda rider, right? And the way it's done that is that it studied the boda boda rider for a whole year. There are 2 million boda boda riders, 2.347 bikes in the country. 80% of those bikes were financed, right? I hope we're together till there. 99% of riders are men. Is that surprising? Now, what are their biggest challenges? The first biggest challenge is that 36% of all road traffic accidents are boda boda related. Sure, if you go back to your villages, you've gone to the hospital, you've seen the ward that's for boda boda guys only. The interesting thing about the accidents these boda bodas have is they're not usually fatal. They break a leg, they break a toe, they break a thumb, they break a finger, they scratch, they get a cut, they need a stitch. And so usually the cost of the hospital cost is not as high as you think, right? What's the second problem we saw? 2.7% of Kenyans have any kind of medical or personal accident cover. That statistic always shocks me. But the real reason that is so is that the bottom of the pyramid doesn't, one, have the luxury to pay a premium for something that might not happen. And if it doesn't happen, they don't get a refund. So if you're at the bottom of the pyramid, that doesn't sound like a good deal, right? Why would I pay for something that might not happen, and then if it doesn't happen, I don't get my money back? And then if it does happen, I have this very painful process to get the benefits that were promised to me. And when I'm at bottom of the pyramid, I already don't trust everyone else. And if you think you don't trust the system, you've never met a boda boda rider. Boda boda riders don't trust financial institutions. They don't trust anyone above them in the social hierarchy for whatever reason. And this is why. We have created an antagonistic relationship with boda boda riders because we call them thieves, we call them bad riders, they drive badly. And the more and more you say that to them, I think we forget that they're hearing. And what has ended up happening is that there's been a built-up resentment over time against car owners, for example. So the same way you don't like them, the same way they don't like you, right? The other insight is that because there are many, I said there are how many? 2 million. Everyone sees them as an opportunity. So there's always somebody trying to take advantage of that number of people for some good political. We see them being used in political rallies. If you want to sell a new item, you go to the boda boda community first, blah, blah, blah. And so it's a completely low trust society. So that's the second problem we identified. And then what we decided to do is we decided to solve for the trust, and we decided to solve for the insurance penetration, and we decided to solve for the product that gives them some money. So what did we do? We studied them again and asked ourselves, what is this thing they do every single day that we can capture them and embed some kind of finance without having them to change their behavior? It seems obvious when I say it, but it wasn't obvious to us when we were doing research, but it's fuel. A Boda Boda rider needs to put 300 shillings worth of fuel to make at least 1,000 shillings a day. Right? That's sort of the ratio. So they have to fuel every day. And so what we did is we designed a product where if they fueled 90 liters at our partner petrol stations, they would get a free personal accident cover that gave them 4 main benefits. The first benefit solves the problem they have already, which is when they go to hospital, they need to put money out of pocket. So we give them up to 10,000 shillings if they came with a receipt and a police abstract proving that they genuinely had an accident. The second thing we give them is a loss of income cover. A Boda Boda rider makes, on average, about 1,500 shillings a day. The lowest makes less than 200 shillings a day, because the entry of a Boda Boda is you pay 15,000 shillings to get a bike. Then you have to pay 500 shillings a day for 365 days to buy the bike. So your first hurdle you have to jump is 500 shillings, and then you start eating. Start paying your fuel, blah, blah, blah. So the lowest sort of Boda Boda's income net is about 200 shillings a day. And the highest, and this is going to blow your mind, can be up to 50,000 shillings a day. The top 1% of Boda Bodas make 20,000 shillings plus every single day. Right? What do? They move high-value items. Money, they're tethered to specific businesses that are willing to pay that extra to make sure that the goods or service arrives on the other side on time and safely. So, what's my point? The future of finance looks like Oye, where the customer will be, the financial service provider will be going to you where you are, providing the service to you without you changing your behavior, because the rider in Oye's case doesn't change anything. They get to the station, they fuel how they fuel, they pay in cash, they pay in M-Pesa. The only difference is they accumulate these points that are counted in an innovative way at the station, right? And that gives sort of a sense of the future of finance. It'll be women-led products. When you go, say, shopping, and I'm just choosing that because that's what came to mind, and say you're paying for school fees, right? And your child has some kind of ailment or allergy, and we the digital financial service providers know that because we offer you some other kind of product, we can be able to embed some kind of insurance for specific, school type insurance into a product at the source of you paying school fees. Things like that are the future of finance. Now, I was asked to also talk about the Data Privacy Act, the Data Privacy Act 2019. And the way I wanted to frame it is data privacy. The fact that we have a Data Privacy Act means that we are living in a very modern society. Because what we're basically being told by policymakers is you collect customer data, they're called data subjects, and you must treat that data in a specific way or you suffer the consequences. Why is that a good thing? It's a good thing because the data is actually not supposed to be owned by the company. The data is your data. It's you who generates the data. The only difference is that we store it. So you must have some rights over that data. And this is what the Data Protection Act does. It creates these two categories of data processor and what's the second one? I'm forgetting. Data processor and data controller, yes. And each of those types of data, those two categories have different functions and have to use your data in a very specific way. You as the data subject have very specific rights that you have. And so if, for example, you want your data deleted from a business, you can ask for that data to be deleted. The challenge with that is, on the business side, we've never designed our systems to remove data of one client. And so what is happening now is we're trying to figure out best practice. So what we're doing at the association is we're working very closely with the Office of the Data Commissioner to ensure that we have a sort of a template data policy that digital credit providers can use. We have a way to deal with this data from disabled people. We have a way to explain certain aspects of our contracts to people who don't speak English as their first language, and many other things that cover the rights as a data subject. If you have more questions, I'm happy to answer them in the Q&A session, but that sort of encompasses sort of the concept of the Data Privacy Act. We are still in infancy in the sense of the office was recently funded a year ago, a year and a half ago, and the commissioner took over then. And this is when we're now starting to see the effects of that office. When's the last time any of you had anyone being debt shamed? It's been a long time, isn't it? If you really think about it, it used to be a lot of noise. Even when I entered today, Eunice, the first thing she said, have you guys stopped shaming customers? But if you really think about it, the last time that happened, it has been a long time. Why? Because of the Data Protection Act and the Office of the Data Commissioner. At this point, I'd like to say thank you and let the panel take over now. Asante sana.
Thank you so much, Kevin. A better round of applause, ladies and gentlemen. So I'd like to call upon the Dean on stage and also Kevin on stage. We have a small token of appreciation. Thank you so much, Kevin. And before we go into the panel discussions, I'd like us to take a round of reflection and relay what your expectations for the panel and also just a brainstorm of what Kevin has indicated. So I'll be moving around with the mic. Feel free to lay down something that you want covered in the panel, and also the panelists are here, they are keeping in check. So feel free, shoot up a hand, I come to you. If you look down, I'll come to you. I think I'll have to move again now. So when I come to you, just have something, a reflection. So we'll do one this side, each in every row. Yes.
Good morning. My name is. I think what I want covered, I like what Kevin has done, just give the history and just give the specific pillars of what formed the fintech history. On the panel, because I'm in the last mile communication, I would like, what do the consumers, I, as a person borrowing the Hustler Fund or that, how does my feedback get to the fintechs? So that's what I would want covered here.
Thank you for that. So I think we'll go to this line. A volunteer?
Stand up. My name is Warenga Kibe. I work with the USAID Kenya Investment Mechanism. I think for me, it's that embedded solutions. I think I'd like to hear more of that from the panelists. What are some of those embedded solutions, financial solutions that they are thinking about or are on offer?
Hello everyone. So my name is Jafet Mursi. So I teach at USIU, but also consult for Technoso AI. So I like what Kevin has to also talk about, even giving the background from even fintech, even for first timers. But maybe when the panel starts, maybe one of the questions maybe would be able to try to answer is, for example, how can, for example, fintechs maybe leverage mostly journey analytics so that instead of, for example, 6 months, Kevin moving from 950 to 1350, can we be able to switch to quicken that through maybe analytics so that we can be able to broaden that issue of, for example, financial inclusion, and also help him to be able to get to that 100,000 so that he can be able to do more. Thank you.
Hello, everyone. So my name is Chris Mwenda. I'm the CEO and founder of a tiny startup called Jumba. So my question's for anyone on the panel, really. So I found it quite intriguing, like the whole concept of the records on the CRB. So I just wanted to know who qualifies as a credit provider. I'm guessing there's some sort of criteria for like the positive payments that you're talking about, the positive like records. So who qualifies as a credit provider? So I think anyone on the panel could take that one. Thank you.
Able panelists, I hope you're taking those in mind just to relay your discussions finally here.
Good morning, everyone. Yes, my name is Brian Ochwada. I am a financial service provider with Britam. I actually wanted to give a vote of thanks to Strathmore Business School and also Kevin Mutiso for mentioning that debt is actually the second best invention, of which I'm a product of debt. Yeah. Okay, my question is, how do fintech companies and insurtech companies, are they one and the same thing? If they are, or if they aren't, how do they address the issue of insurance penetration from 3% to more in the country?
Thank you so much. I think there was one more burning. Yes, please.
Good morning. My name is Alo, Emmanuel Alo, from Flash Credit. Because of a lack of a regulation. Yeah, thank you.
Thank you so much. One final one.
Good morning. Mine is Cheng Morris. Fintech has two levels. One to be covered is the startups, applications. Then number two, the business side. Kindly cover the two of them at the same time. Thank you.
Good morning. Okay, my name is Emma from Mats Technologies. I am from Mombasa. We do AC installation, maintenance and repair, and I also make granola, which is a breakfast cereal. My question is more, or rather my interest, is more on the data protection, because, well, I'm surprised to hear that someone, a third party other than Safaricom, is able to scrape my SMSs and kind of scrape or delete the other SMSs, leave M-Pesa and work with that. So how does the regulators ensure that these third parties don't keep my information and use it against me at any particular time?
Thank you. So I think we have reflected on what we expect from the panel, and I think the panelists are here and they'll try to delve into that. The only thing I'll add into that is among the trends for fintech this year, Kevin alluded to alternative to embedded finance. So I would like, on my part, I'd like them to look at alternative finance, the SaaS platforms, AI technology, what we are doing that is coming up, and also the regulation technology. So I think that's on my bit. So at this point, I'd like us to introduce the next bit of the panel, and I'll start off with a gentleman who has over 18 years experience in credit information management services at senior management level. He previously was the CEO and the Chief Executive Officer for CRB Africa, now known as TransUnion. He's the current regional manager for East and Southern Africa. At the Dairy Board. She offers easy and purposed financing to the business community through organizations in Nyali Capital Limited and EcoBiz. She is a mentor, an entrepreneur, and a leader. A round of applause to Wanjiku Wambugu. Also on stage, I'd like to call upon a lady who's mission-oriented and impact-driven marketing and communication executive with over 15 years of success in developing successful teams, working with entrepreneurs to tell their stories and supporting businesses. She is a storyteller at heart, divine in general for brand and product marketing at Cellulant. She joined Cellulant in 2015 as a brand manager and consequently founded the first in-house marketing team in the organization. A round of applause to Devin Muragijimana. I hope I pronounced the name correctly. Finally, I'd like to call on stage our moderator for this session. She is an educator, entrepreneur, business, and coach. She's currently serving as an adjunct faculty at Strathmore University Business School and a trainer of Kenya School of TVET. She is passionate about business coaching with a focus on innovation and entrepreneurship through her coaching. She has a wealth of experience in the education sector, having worked as a teacher, lecturer, and trainer for over 2 decades. In addition to her work and education business coaching, she's a mentor to many young people, particularly women, and she's actively involved in community development projects. A round of applause to Ruth Kinyanjui, a moderator for this session. I'd also like to appreciate our live on Facebook and YouTube. Please feel free to tweet, engage, and engage us. I also like to appreciate Standard Media Group, who are partners in kind, who will be covering this event. Over to you, to the panel.
Thank you so much for having this panel. With me, I have a powerful panel to take this conversation about fintech. This conversation is a thought-provoking one. I invited thought leaders to share with the world, just like Kevin has put it, so that we can have a discussion around the fintech. Fintech is an example of disruptive innovations that have engulfed the world. Kenya has been put on this map due to our innovations in M-Pesa from 2007. And going forward, it has become our lifestyle. The way we work, the way we interact with money, the way we pay, the way we shop, the way we even order things online, it's cutting across the spectrum. So this conversation is going to be touching those areas with an angle on fintech. And I'll just give like 1 minute for each of these panelists to introduce themselves, like what they do, and as far as this event is concerned. Thank you. We start with Konyiha.
Thank you. Before I start, I think it's also good to note, as we talk about fintech and its disruption, you can tell from this panel, it's obviously been disrupted by female, dominated. And actually, I've been asked to speak first. Usually it's ladies first, but then I'm a minority here. But anyway, as you heard, my name is Kamau Konyiha, in the credit information space, working in credit bureau, debt collection for very many years. So it's something that I've seen evolve from traditional to fintech in the changes when we're moving from high ticket value, very low volume, to low ticket, high volume velocity. And how do you actually improve, maintain efficiency, profitability, and also be able to do these things in a way that, best ideally, basically just profitability and being efficient in those operations. So fintech we've seen the fintech evolution change things, behavior, and the way things operate. So excited to be here and willing to engage further.
Thank you.
Good morning. My name is Rose Muturi, and I'll start with just a few questions as I introduce myself. How many of us have a bank account? Great. How many of us went to the bank, at least in the last 1 week? Probably work there. On a light note. So that tells you something. So my name is Rose Muturi. I actually represent the first neobank in East and Central Africa. Just to introduce what neobanks are for the ones who may not be familiar with the term, these are branchless banks. So I represent a company called Branch. The irony is we are Branch, the branchless bank, and we're the first digital bank to offer financial services to the world-class. We actually look at the mobile generation, so we are providing world-class financial services to them. So if you consider yourself to be in the mobile generation, you are indeed our target market. In Kenya, we represent close to 5 million Kenyans who bank with us without branches, so don't be afraid. You don't go to the branch anyway. And personally, I've been in the banking space. I've been in credit information sharing as well, worked in a credit bureau before. I've also been in the fintech space, which is where I am today, so I'm happy to be in this conversation to just discuss technology, financial services, and how everything is panning out.
Habari asubuhi. Good morning. It's a cold morning for me because I haven't felt cold this year. I come from Mombasa, so I just arrived yesterday. So you'll bear with me. My name is Wanjiku Ambogo, and I am an entrepreneur. I run Nyali Capital Limited, and I also run EcoBiz, both of them in the money space. I sit here to represent the traditional banking that are slowly catching up with fintech. So I am with people who I should be able to continue to bond with and interact with so that we can take our products to the next level. So if you're among those people in this group, then you're not alone and you're also represented here. I've been doing LPO financing for the last 10 years. We started in Mombasa. We have a branch here in Nairobi. And we also have another brick and mortar branch in Eldoret. I know that's the language now that you stop talking about soon. And that's why we are having this this discussion today. And at the same time, I've been focusing a lot on AGPO, those of you who understand access to government procurement opportunities, in the space of financial inclusion, where we do lend to the women, the youth, and persons with disability, who have gotten LPOs and tenders from the government. And most of the time, they're also being asked for collateral by other financial institutions. And for a lot of time, we did not ask for that. So we are happy to have this discussion and see how maybe the laggards can come forward and catch up. Thank you.
Welcome. Let's have Divine.
Good morning, everyone. How are you doing? As they said, I have the hardest name to pronounce here today. So my name is Divine Muragijimana. I'm originally from Burundi. I work at Cedulant. Most of you might be familiar with Cedulant. We essentially we've been in business for about 20 years, but one of the things that we are very keen about, and I was really happy to hear what the Dean had to say, because we are very much about the transformation of the continent, and our mission is to accelerate growth for African economies. We want to do that by creating seamless experiences through payments, and we're doing this across 35 markets. We have 18 markets where we have offices and teams, and as let's say the last 3 years, we've really been keen about what this actually mission means. What does it actually mean to accelerate growth? What does it actually mean to help the continent and the countries that we're in accelerate their growth? So we converged our ecosystem into a single platform. So today we offer a single platform, a one-stop shop for businesses. It doesn't matter whether you're a small business or a big business, whether you're operating in Africa or you want to come into Africa. What we do is provide you with 4 products that allow you to either collect or pay out, for example, if you want to make payments. And we are in a season where we really want to see what we can do to create seamless experiences for not just the businesses, but also for the consumers. So I'm really excited to be here to engage. So when you talk about embedded finance, this is something that we've seen, and very keen to see how it's actually going to impact how users interact with payments, or how users access things like lending in a very seamless way. So I look forward to the conversation.
Thank you so much, Divine. Thank you so much, our panelists. My first question goes to Rose Moturi, who is a champion of neobanking. We want to know how digital lending is bridging the gap between the banked and the unbanked, and especially the marginalized and in the rural areas.
So I'm going to address that question not necessarily for digital lending, but essentially for digital financial services. So I know part of what we've been discussing, especially this morning in the keynote, there was quite a bit of information that was shared about digital lending. So ordinarily you'll find where the digital platforms come in is where the traditional sense of financial services is not able to reach. So you can be able to scale and go much faster and wider if you're using a digital platform. So essentially, when you're looking at how, let me use the context of East Africa, and one of the tools that has made it very easy for access to financial services has been the mobile phone. I think it has been a huge equalizer in the market. So what you find has been happening is the fact that someone has a mobile phone, and that's where the innovation started from, you're able to create what you call the digital footprint. That digital footprint is what you can be able to measure. I know there was a question on analytics and essentially how you behave, or the kind of way you work, the kind of patterns you create when you're working with your cell phone can create a digital footprint that can be measured, and within that you can be able to create what you call a scoring algorithm. So here we're getting into your, I know there was a question about artificial intelligence, so all that mixed together, without going into too much detail, you can be able to create a digital footprint for a user and provide credit to them without having to see them, without them having to come and fill in any paperwork. So the most fundamental things for this to work, there's what you call the institutional infrastructure. So you need, for instance, if it is network coverage, telephony coverage, do you have that across the country? So you can be able to get to the far-flung areas, and essentially you don't need to have branches there. So I think in Kenya, the telephony network has actually done quite well, and that propelled the access to credit in even far-flung areas. Then the second one becomes, and this especially in the peri-urban and urban areas, access to the internet. So you find there's a lot of information you can be able to get for users who are working with smartphones. And I would ask you, anytime you're downloading applications, please don't just say, I consent, I consent. Read those terms and conditions. I know there was a question about it. Those terms and conditions are asking you to give permission so that the company or the owner of the application can be able to assess that data and possibly provide you with a service that you intend to get. So on the credit side, that information is what has been used to gauge and to measure what is the repayment ability of a user. It's technology that has been used for quite a bit of time. Actually, Kevin alluded to it. I think Kenya was one of the very first markets, pioneers in that type of technology. And it helped people to access financial services outside of the traditional banking system. Now, being able to get that microcredit, which was the first point of entry, when you get that loan and you repay it, we are able to see, is this customer a good customer for credit, and you continue increasing their limits. When you get to the next phase, you start introducing them to services such as payments, you start introducing them to services such as savings and so on. But the first point of entry is normally the credit side, because if you look at it as a carrot that's being dangled, if someone comes and tells you, hey, we can be able to give you a credit facility, no collateral expected, just fill in this digital application for less than 3 minutes, you'll be able to access your first loan. It's actually very, very exciting and very attractive. So a lot of Kenyans have been able to access credit in that way. That also talks about how we were able to get quite a number of customers' data in the credit bureau mechanism. And for any economy to grow, the credit mechanism has to be working properly. So the digital penetration is actually what has helped, especially the mobile penetration and internet.
Thank you so much. Let's hear your views, Wanjiko, on access. The question is about how you're bridging the gap between the bank and the unbanked, and especially in the rural areas, basically touching the access.
Okay. I think always, it's not like people lack the platforms to borrow from, whether it's financial or non-financial. We have chamas, we have peer-to-peer lending, but the issue is actually access. And I like what Rosa shared about dangling the carrot, because I've realized this is what is happening today. Due to the low purchasing power that that many people are experiencing today, in the space of Ecobi Circle, I do sell savings. I'm big on selling savings. I believe this is what sorted most of us during COVID, and it will still sort us in the future anyway. But even here now, we are talking about lending. But I talk to different groups, even at the bottom of the pyramid, like the security firms and the guards. And when I could speak about savings the years before, like last year and the year before, the conversation is not the same. I even do a simple survey and ask them, if today I stand here, I'm selling to you credit, and Rose is here and she's asking you to save, where would you go? They tell me they would come to me because I'm the one who is doing lending. So the conversation of saving is coming down and down. So I've gone back to them today and told them, then I'm going to offer you small loans, micro loans of between 1,000 and 3,000 shillings. So that initially then, you can trust that I can give you my money, so that when I come back again and we now start the conversation of savings, then we are likely to have a conversation and you're likely to listen to me. So for me, that is the way in my space I'm trying to create that trust with everybody else, and even at the bottom of the pyramid. And I think even Kevin, as he spoke, he talked about the trust. So that when you then start saving, and when you save from the circle, then you have access up to 3 times of your savings or more, even depending on the circle that you join. The second way to access credit that is happening and I'm currently doing is through collaborations and partnerships. So I'm like now, just last month, we signed an MOU with Women on Boards Network, a platform that has around 700 women. So I'm telling them then, if you need SME working capital loan, then come to me. So even when it comes maybe to a fintech, a product that I need to tailor for this particular group, then I've told them I am available. I'm your pillar that will provide this financing. In Mombasa, where I started my business 10 years ago, like I shared, I am also a member and a director of Kenya National Chambers of Commerce and Industry. So, and I represent the women in business. So in that same space, so we have many people coming over, any group that wants maybe even to start an advisory firm or settle in Mombasa, they pass through KNCCI. So when they come, then they want to talk to our members and tell them about the products or the advisory services they're offering. So we have a number of them, including the Strathmore Kenya Small Business Development Center. So even when they give advisory to the SMEs, then they are also linking them to the financial pillar, so that the moment you're ready to borrow, then you already know about Nyali Capital, you already know about any other bank or whichever institution, so that you can be able to borrow easily. So I think those are some of the ways that I'm contributing to this.
Thank you, Wajiko. So we've learned that we need to save, so that we can access capital. You have a word for that, Divine, about access to capital?
I think let me approach it from a business perspective, because I think this is the place. We've talked a lot about access to capital. We talk about lending from an individual perspective. But I think in our experience, and this is because we've done the spectrum where we went to individuals. We started the business with value-added services. We went to banks, did mobile banking for a while, then went into consumer, build a super app that at the end of the day, we realized that actually the power is in the business. So I want to approach it a bit from how do you actually give access to businesses, because this is where we're seeing a lot of potential when we talk about, for example, fintech and the growth and the opportunity. So I think one of the key things we've seen with small businesses is that they're the fastest if you look at the growth of businesses in Africa, 90% of them are micro businesses, small businesses, and they're the ones that, for example, Mama Mboga, who is both an individual, for example, and also a business owner. So we've been trying to figure out how do you actually give lending to someone who is a business, who needs it. And one of the key things when we talk about access is actually embedding some of these services in their everyday life. And that, I think, what you just talked about, that is about actually collaboration. And collaboration for us looks like working, for example, with someone who has access to lending and giving them capital to do their everyday work. So for example, a business, if they want to buy a load or a crate of soda, for example, instead of giving them the money, what you do, you lend on their actual, let's say their actual sales. So you are banking on the fact that they're going to make maybe 100 sales that day, so you give them a loan for that day. So that is actually embedded within their everyday work. So I think that's how we're seeing it growing. I'm not sure that it's the perfect model, but I think when we look at where Africa is going, when we look at lending, when we look at the growth of the fintech space, I think the biggest place we need to actually start with is not even individuals, but also actually the businesses themselves, because most of the micro businesses are both individuals and businesses at the same time. So if we can crack that, I think that's where the opportunity is.
Thank you so much, Divine. And then that she has provoked a conversation on embedded finance. So we want to know, what is the role of embedded finance to the fintech ecosystem? So I think Divine again speak about the embedded finance, and then you pass it to Konyiha.
Okay, so wow, embedded finance is such a, it's the big, in fact when you're talking about trends, I think you had asked something about trends, and it is one of the hot yet very old topics. Does anybody know, top of mind today, when we talk about embedded finance, what comes to mind? I'm going to engage the audience so that, anyone?
The audience?
Insurance?
There's a hand there.
Credit on? Okay. Anyone else? E-commerce? Okay. So does anybody know that credit cards were the first embedded finance? So when you have debit cards, credit cards, yeah? So embedded finance seems like a very hot topic today. It's just, I think, maybe in Africa we are a bit behind because in Africa we leapfrogged. So if you look at how the evolution of payments, it went from getting, for example, loans from or getting finance from someone at your local shop or someone in your local neighborhood to going to get a bank account. So there's an evolution of payments that Africa generally has not gone through. So when you look at the embedded finance in the Africa context, what we're looking at is actually how do we, when you look at an app, whatever you interact with every day, when you have, let's say a retail app, you have an e-commerce app, for example, how do you embed things like lending? How do you get insurance? How do you get things like incentivization to actually access to savings, right? So we're talking about savings. So when you look at embedded finance today, and I don't think maybe we figured it out, because I think they maybe, if you look at the UK, US, they've figured out how to embed some of these things in their everyday life, which we are still trying to figure out. But today, what embedded finance actually looks like is that loan that you're getting from Safaricom is a version of it. It's the businesses who are now going to be able to access loans within, for example, what we're doing at Seduland is partnering with anyone who actually is able to offer loans to businesses. They come into our ecosystem, they plug in, and then businesses are able to access lending within our payments ecosystem. It's actually being able to go to, and this is a shameless plug, going to Ting, for example, and using Britam and accessing savings with Britam, for example. So that's what now embedded finance is starting to look like. And that is one of the biggest trends. I think let me go back to if we can crack that, if we can crack and make it a seamless experience for everyone, whether you're a business or an individual, I think that is one of the biggest linchpin for us from a fintech perspective, and it's the thing that maybe keeps us awake at night at Seduland, and probably most of the people who are now in fintech, because we want to figure out how do we create an experience where somebody comes in and they want to buy a bag or they want to buy groceries, and at the same time be able to save, at the same time be able to access a loan, and then be able to pay the loan without, for example, being shamed or fearing that they'll be shamed, for example.
Thank you. A word from Kamau Konyiha.
Yeah. I think on that, with embedded finance, I'll take you a bit. When you look at fintech as it is today, I think one of the biggest challenge we have in Africa is that we take things in silos. So you say fintech, you think about lending, that's fintech and everything. So now embedded finance has come up, and it's all part of fintech, but it's now putting all these things together into one. So I like giving this example. Your bank today, your traditional bank really doesn't know you. We had this conversation some time back, and the story was, between the 21st to the 30th of the month, the bank gets a flood of deposits coming in, salaries being paid. But then within that same period, all that money is coming out, bank to M-Pesa, for them to go and make payments for Kenya Power, your telephone, and so on and so forth. So in that instance, the bank does your banking, but they don't know you because they don't know where your money is going. But if they were to be able to embed those financial services in there, to understand you better, to know Kamau, this is his behavior, this is what he's paying for, this is what these are what his needs are, and these are the things that would probably be of interest to Kamau, then they'll begin to understand me better and be able to curate services and solutions that are geared towards me. But the issue right now is that within the current status as it is, probably Branch would be the only one that we can say today as a neobank is the only one that would say that they understand and know their customers and where they're transacting and what they're doing. But until that actually happens, embedded finance is quite some distance away, and all we have is silos of different fintech solutions being provided by different people, but not all in one space. So it tends to drive us, and I guess that's why we are multi-banked, multi-borrowing, and using multiple service providers, because no one person actually understands you as an individual and your needs.
Thank you so much. A word from Rose.
So, I don't want to sound controversial, but I do agree in terms of how we've said embedded finance has a long way to go. But I think we've done pretty well as a country. So you'll find today, at least for, let me say, the urban population, the need for cash becomes diminished, apart from right now where the transfer fees may become a hitch. But you'll actually be able to do various financial services that you need through various partners without the need to have cash at hand, or whatever, maybe you're going from one institution to the next or one company to the next. The flow of those transactions is actually, to some extent, quite seamless. So you may find what is happening is partnerships are going on. We do have the peculiar nature of having, say, one telco giant that's really done quite well in terms of payments. But if you look at the banking space as well, I think they're really doing well to, and I know Cellulant is one of the partners that's working with them, to ensure that that last mile is being taken care of. So if you want to pay for your hospital insurance, NHIF, you'll find it somewhere on an application. If you want to pay for goods at a shop, there's some that enable you to do that. If you're a merchant and you want payments from your customers to go into your bank and repay a loan, that already has been taken care of. So sometimes I think we judge ourselves harshly if you compare ourselves with maybe a developed market. If you go to a developed market where all the infrastructure is laid out, if the whole country has internet coverage, you can do a lot. But if you go to spaces where you don't have that type of infrastructure all the way, we may look at ourselves like we are behind in terms of the innovation, but I think we've really done pretty well. So and even right now we're talking about government services. There was a time, in fact, I was in a meeting recently and someone asked, do you remember how you used to pay taxes before iTax? You don't. Like if you do, I'm sorry, I know it was painful. I think those papers were pink because I don't remember, but it was painful. But now here we are, we don't even remember because the innovation came. It's not that the bank may be doing it directly, maybe some are. We have payment partners that are enabling that, and you're able to make your statutory payments. You're able to just live your life using digital payments and using the digital infrastructure that we have. And I think the beauty of such markets in the developing countries is you learn how to work with the absence of a perfect situation, so you can be able to sort it out. You can be able to pay your parking fee using a USSD. And USSD is one of the most clunky platforms to use on the planet. But we learned how to do it. So M-Pesa started with USSD. But here we are. Now if you're told to use it, you're like, no, I prefer to use an app. But it picks information, like every institution will pick information from another. So all the financial institutions coming together, whether it's insurance or whatever the case could be, are working hard to bridge the gap in between to make it more seamless. And that's where companies like Infobip would come in. So they give you that omni-channel to understand what is my customer saying when they're transacting on another platform using the funds that I gave them. So I would say I would pat ourselves on the back and say, I think we've done pretty well. We have some way to go, but we've done pretty well.
Thank you so much. I can just chip in and give you my story, background. My background is an educator. Back then in 2007, I was in a conference with NEPAD, and we were talking about e-schools. And one of the things that came up is e-government. So we were saying at some point, the government will have e-government. We will access government services online. Back then, Bitange Demo was a PS. So we were talking about digital kiosks in the rural areas where people can access government services. I think that time we also started accessing the KCPE results online, digitally, you know. We were talking about the future, but now the future is here. We are now we are already accessing everything online. This is because of the disruptive revolutions that have been enabled by technology uptake. So we have smart innovators amongst us. So this now brings us to, I'm still feeling like we still need to address the issue of access to capital for startup. We've seen that we have chamas, we can save, but this still, the question of access to capital still remain. Is it still the point of access or financial literacy? So I'm throwing back these questions to all my panelists, and I can ask Ross to start us off with this access, especially the startup scene. Have you heard about the questions and people crying that we are here, we have an idea, but we can't access capital? So what is this access? Is it really capital they lack, or they cannot be able to express like what they need capital for? I am throwing it even to the audience. Access to capital?
Okay, I can actually see someone in the audience who I think would be very well placed to answer, but I will not throw them under the bus because they're really good in raising capital for their business called Power. So, access to capital. Hi, Brian. How are you doing? Okay, so I think when it comes to access to capital, is there funding on this planet to fund startups? Yes, tons of it. How is a business positioned? That becomes a question. So you'll find, I remember the time when we were trying to fundraise locally, and the fact that we were doing unsecured lending on a digital platform, no one is filling in any forms, was really scary to the local investors. They said this is the highest risk business they've ever seen. We even went to banks, and the banks that we were banking with to show them, hey, can we be able to get, even if it's going to be a commercial paper or some form of loan, and they deemed the business to be a very high risk. Now things have changed because we are now regulated. We are a neobank. We've been given an MFB license. So they're willing to sit and say, I think you're onto something. So the bone of contention here usually is, how is that risk being perceived, and how are you positioning the business? What need are you solving? And the scalability. So you'll find if you're trying to fundraise locally, and I'm happy that we now have VCs locally, companies that have come up and understand the needs and the nuances and the culture, and they can be able to even do smaller seed funding. So you're talking about maybe, let's say in dollar terms, maybe $1 million and so on. But if you talk about a global scale, when you talk about fundraising globally, the way it is looked at is the need you're solving for. If it is a solution, let's say it's InsurTech, what scale are you looking at? If your scale is small, the audience, you may not get the audience that you need internationally. You need to be able to do your math very well, to do your projections very well, your market sizing, and have very good conversations in order to show it's not just a hockey stick. Because right now in the VC world, they've moved away from high growth, let's break things and get as many customers as possible. They're looking at how soon can you be able to break even? When will you be able to be profitable? So having those networks, and especially when I look across the room, I know quite a few people within the fintech ecosystem, and they've done very well in terms of raising funds. Just having those conversations, them taking you through These are the paths we went through. These are the advisors we spoke with. This is how they were able to help us, show the models of our business, how it's going to grow. Those are some of the things that need to be done. I've sat in conversations where people are pitching, and the conversation feels very, for lack of a better word, far-fetched. It sounds like this pie in the sky thing that's going to bring world peace, but there's nothing here. Like, if you look at the tangibles, you can't see anything. And maybe it's because as an innovator, you get very, very attached to your product. You love it so much. You have such big dreams, but you need other advisors or experts in the area, of people who've gone through that path before you, to tell you, hey, hang on, hey, this is how you need to take the path, or your idea is great, but you need to change it a bit, or talk to this other person who's already doing the same thing. All that can happen. So the important thing in this conversation is to link up with the local companies that are doing venture funding. I think that gives you a very good chance, because they would understand your business better. And if you want to do global fundraising, there are experts in this room. During the networking session, please talk to them. I've already mentioned one. They can tell you how you're able to do fundraising globally as well, because there is a lot of funding.
So the funding is available. Funding is available, so we only need to prepare ourselves to receive the funding. Because the issue of access has been a problem in the startup meetings, where people feel like we have this idea, but we have a challenge. We have a big challenge in accessing capital. Probably we need to look at it from a different angle. Now, back to the info about, this question is for Kamau Konyiha to tell us about credit information. So this question was actually coming from the participants. They asked, how do we ensure digital lenders provide financial literacy as well as due diligence to ensure loan repayments and to avoid blacklisting?
Thank you. I think why would I start? One, I think from an industry perspective, we need to forget that word blacklisting, because I don't even know where it came from. It's nowhere in our terminology. It's nowhere in the regulations. It's just a word that was coined that that I don't know what it even means, what blacklisting is. Because at the end of the day, as a bureau, what we do, we just hold factual information about a contract that an individual or business got into. They got into a contract on this date, and the contract stated that you would pay this facility over these milestones, and this is where you reached and you stopped there or you finished. So it's just factual information, and it's not shaming you, but actually reflecting the reality of what actually happened with that particular event. So when the question you're saying is...
Yeah, they're asking, how do we ensure digital lenders provide financial literacy as well as due diligence to ensure loan repayments and avoid blacklisting?
Yeah, so then remember, okay, so we need to also remember one thing. The people who are actually going out there to lend, they're running businesses. And no one actually ever starts a business to make a loss. You're always doing it to actually earn profit. So it is in their interest to ensure that every step that they take is actually going to lead to that position of profitability. If it means that I educate my customer and tell them, this is what I'm selling to you, because if you don't understand it, there's a likelihood that you will not pay me back and I'll not be able to get my return. So it starts off with the actual business itself. How are they communicating to the customers, telling them what they're doing, and how about they go about what it is that they're doing, because they are in it for profit. There's obviously then the next thing, there's regulations, which are also very important. I know sometimes that word regulation sounds very strong and very intimidating, but I would like to look at it as a framework to be able to give guidance on what, in what parameters you should be able to operate in, so that there's no gray area as to feel that you are being used, especially when it comes to data. There is a very high risk that data could be misused or misrepresented if there's no framework to actually help in guiding those people dealing with it. So regulation is very important within that whole process of financial literacy as well. as a guideline to this is what you must do when you're getting into this business to be able to engage with your customers, for them to be able to understand what it is they're getting into, to avoid a situation where their reality that is being reflected on the bureau is not negatively impacting them, but they actually went into it fully knowing what they were getting into.
So on the same breath, can we have a unified portal for credit referencing? That
so it always comes up, and I think so we've got different bureaus all getting the same information from the same from the different financial institutions. The biggest challenge is actually the validation that is done at each bureau. So what is happening as an industry, they're now deploying an industry validator, which will be at the lender side. So the data that is leaving the lender's institution is validated there. If it doesn't meet the criteria that it is meant to meet to be able to be sent to the bureau, it will not be transmitted. So rather than having one center for everything, you just have the validation happening where the data is actually being generated. And then that is pushed through to the bureaus, so that ensures that the data is the same. The challenge with having a central place for all this data is when it comes to actually dealing with errors or dealing with a sort of a dispute. So who is then responsible? So I, as a customer, can walk into Credit Info and say, this information here is wrong. I can see that this information was actually sent by Bank X. We can then communicate directly to Bank X. But if this information is coming through a hub that is centralized, that hub then we will just tell them, go to that hub, and that hub will sort out that data, because we don't have that relationship.
Thank you so much. About any from the audience, do you have a question for credit referencing? Because it has been a big issue. Especially, there are new models that are coming in terms of like buy now, lipa later. And one of the things that is making people not be able to buy is because of credit referencing. So when you go back and you have applied for that product or service, you're not able to get it because of your credit history. Wanjiko, you want to respond that?
I just wanted to add something to what Kamau has said. I think it is in the best interest for every individual to understand that you can get access to your credit information, whether an individual or a company, and you have access to one free credit report annually. So having 3 bureaus, you can actually get life hack. You can get 3 free, 1 from each. So you can actually be able to see what information do they have about you, and they have digital platforms for you to access, whether it's going to be mobile or web. And it's always been, people hardly look at that information until the time they go apply for a facility, and maybe that institution is referencing the bureau, and you get an update that, hey, you need to update something, and you get shocked, people are angry, why is this information there? But you did not play your part in finding out what information does the credit bureau have about me, which has been provided by the financial institutions that you bank with or do financial services with. So take this opportunity to check your information, because it is available.
Thank you so much. The information on our credit reference is available. So let's hold our question. You'll have a Q&A session. Please keep them directed to each of our panelists. Now I'm going to move to payments, and I'll ask Devin to talk about the global payment processing and how it's affecting business in Kenya and in Africa in general, global payment processing.
That's such a wide such a wide question, because if you look at there's so many trends, and I'm going to try at least to cover some that impact Africa and in particular businesses, because that's, I think, where a lot of our heart is. So there used to be a time, I don't know if somebody have ever had this story, where when I moved to Kenya, I never imagined I would walk out of my house with my phone, come back with groceries. You've had that trend, right? it wasn't for a long time, that wasn't possible for many other people in the world. And because you walk out with a credit card, walk out with cash. But I think when you look at the global trends today, is that if you, let's say, span out to mobile wallets, the first trend are mobile wallets, that is really shaping how people interact with money now globally. It used to just be Africa and emerging markets, but now it's a global trend. We have about, I think, in recent studies, about 1.3 billion mobile wallets, and about 950 million of those ones are in Africa. And so if you look at the one thing that is actually shaping how payments are evolving, even fintech, how fintech is evolving, is mobile wallets and the growth of mobile wallets, the access of mobile wallets in Africa. Sorry, 950 is emerging markets, 300 million is Africa. That's, I think, McKinsey's report said 300 million. But if you look at the other thing, so we talk about convenience of payments. Embedded finance, as I mentioned before, embedded finance is also another trend. If you look at the way that, and this is shaped by the demands. So Rose talked about how far we've come, and I agree. In Kenya, definitely we've come far when it comes to access to, so far as embedded finance, how far we've come when it comes to access to financial services, for example. But I think sometimes, and this is a challenge to everybody who is here who's trying to build a business, we reference a lot of our trends based on the people in the room. Right? So how many of you guys have let me just, do like a count. How many of you guys have a mobile, a smartphone? Smartphone. Everyone. All the other guys don't have a smartphone. No? How many of you guys today use M-Pesa? Today. Okay. How many of you guys have gotten, there was a Fuliza question, so let me go to the other one. How many of you guys saved this week? Saved, deposited money in your savings account. I don't know if you guys want to say that out loud, but so if you look at the people in the room, so this is usually when you come into an urban population, and because the urban population is growing, it's easy to say, for example, that we're actually doing well. But the one thing that is actually now impacting how people access payments is the fact that financial inclusion, so we talk about financial inclusion from an access perspective, but the fact now that financial inclusion has moved from access of financial services to actually economic inclusion, where now it's looking at how people are accessing financial services to grow their businesses, to grow their ideas. So the fact that that movement of conversation from I'm accessing financial services so I can actually access a loan to I'm accessing funding for my business is also impacting how payments are moving around the world. Then I think the other thing is security. So we talk about security a lot. I think we've if I hear here people are talking about things like thing is it's a term, so even sometimes when you call someone, we tried a lending product and that's the first time I had blacklisting, that blacklisting was a word. But I think people generally are starting to worry about their data. They're starting to worry about, and this is a global trend, it's not just in Kenya, it's not just in Africa, but I think the one thing, and it sounds so small, but the idea that now biometrics are being used to for a verification. So Safaricom, I think, launched recently, not so recently, but my voice is my password. Yeah, how many of you guys are using that? Hey guys, not so well. How many of you guys use your fingerprint to access your devices? All right, how many of you guys use your face to access your devices? So the good thing, and thank God, that there's only one you in the world. It used to be that you used passwords and PIN to access, for example, your bank account. But the fact that now your fingerprint, and you have a unique fingerprint, right? And the fact that your eyes, your face, your voice are actually being used to access your very private information is a way forward. And this is something that it used to be accessible to others. So it started with the, it used to be accessible maybe outside of Africa, but you can see even with the different apps here now in Africa, or the different even products that we are developing today, biometric verification, I think, is one of the biggest change in making sure that you can access your information securely, that you don't lose your PIN, for example, and it goes into the wrong hands. You lose your password, for example, it goes into the wrong hands, and then you lose your money. So, so I think those, like, if you look at the four things, embedded finance, the fact that you can actually now, money is moving at the point of sale, at the point where you need it. You can access finance, savings, insurance, lending within your everyday life. You can access loans when you need them for a business, for example. The fact that mobile wallets and the access, so it's becoming even easier for you to access internet. It's becoming cheaper, so the growth of mobile wallets. And then just biometric verification that is securing access to private data, private information, and then the fact that financial inclusion, for the first time, we're moving away from financial inclusion being, I want to access, for example, finance as for my education or for me to buy groceries, to I need to access finance to actually grow my business, is shaping how payments, and just globally, how payments are evolving, access to payments, growth of fintech, and that is starting to impact at least the three markets. If you look at Nigeria, it's Nigeria, Egypt, South Africa, and Kenya being the four markets that are seeing a lot of impact of those global trends.
Thank you so much, Devin, for your input on payment processing, and it's really shaping the way we transact and do business. Wanjiko?
I would like to share that Devin has done it well, isn't it? Yeah, for that one. I think we are all using embedded finance without knowing. I think that's my conclusion for now. We are doing it, not knowing what it's called, but I think by today we can say it was embedded finance, right?
Thank you. Thank you so much. I think now we can speak to challenges. You know, when it comes to innovations, adapting to the innovations and using the innovation. I recall one time, the first innovations in the banking industry was automatic teller machines, ATMs. And somebody was fearing, like, I don't want to get that money from machine, I want to go and get it from a real teller in the banking hall. Now it has really moved. You don't need to go to the banking hall, you can access the bank with your phone, in your smartphone. These innovations come along with challenges of adoption and even the use and even customer awareness. What are some of the challenges facing our financial solutions as far as adopting them is concerned? Can we start with those, especially in new banking? What are the challenges facing us as we adopt them? Do we fear them?
Well, so I think in the Kenyan context is actually quite interesting. We tend to try new things. I was looking at a report about cryptocurrency adoption in Africa, and I think we're either the second or the third highest number. Yet it's not legally recognized, but we do a lot of that. So, and even when mobile money started, we embraced it as it were, and we said, hey, whatever this thing is, we're just going to do it. And therefore, a lot of innovations that have come in, look at, say, digital lending when it came in, many people embraced it and moved along. So I think in terms of adoption, we tend to take the risk, and that's a very, very fantastic thing about Kenya as a market. I know Nigeria is also very good in the Africa context in adopting new things that come in. Companies like Buy Now, Pay Later, there used to be, I don't know if you remember ART, if you were born those days. It was the same context. But now it's been digitized, and people are actually embracing it because it's important for them to have a particular item or a household item, and they would want to be able to have it. So they won't ask too many questions about which robot is behind the scenes doing all this math. We tend to adopt that. So I think that what would be the challenge which keeps anyone in the technology industry awake would be the cyber security threats. We are always alive to that. So I'm addressing it from a supplier perspective. because the customer may not go to bed saying, oh my goodness, I have money with Bank X. Are they going to be hacked tonight? You don't think about it. You expect that everything is going to be okay. But for the providers, that's one thing that keeps them awake for the larger extent. Then the second one, which now we're very alive to, especially after the Data Protection Act was passed, and now everyone has to actually comply with it, is we are now becoming more and more deliberate about the information we're asking for, and the user is becoming more and more interested in finding out what is this information that you're picking about me. How is it going to be used? Can it be used for good or for bad? So the element of data being accessed, you find, may pose a barrier to entry. Maybe you have a fantastic product, it's a digital product that you want to launch, but you're asking for too many things. You'll drop a lot of customers. Try and do those experiments and you see where are your customers dropping off because of the sensitivity of the information you're asking for. If it is ID data, we know there's from immigration, you can actually get that information with consent. But the more details that you get for your platform, the more curious the user becomes. And that becomes a challenge because you want that data. You want to create algorithms and create a fantastic tool that can do what you need it to. But the user is increasingly, which is a fantastic thing, is increasingly asking, why do you need this data? So if I can say something specifically about Branch, I think from the Data Protection Commissioner's Office, they said, because we presented to them how we do our data processing, and they gave us our certificate, we are the only institution that gives you the right to be forgotten. So if today you came and said, hey, Branch, I need you to forget about me, we will forget about you. So when you come back, you'll start afresh. But it's something that we were intentional about because your data is your data. So feel free to come back with us.
Thank you so much. Can we have Kamau add in about data?
Yeah, so going back to the question about innovation within and the challenges in innovation in the fintech space, I think particularly in the banking sector, you've got to remember a bank's primary duty is to safeguard your deposits. So they have to be very intentional and careful in terms of how that is managed and what they do. Because I think the bigger crime is a bank going down because they lost your deposit than anything else. So I think innovation may seem slow in that sector, but it's also very deliberate because they also have to be very clear and understand what they're getting into. You don't want to get into a situation that puts you at risk and you didn't do what the necessary things to safeguard that risk from actually happening. So discussions always happen within the financial industry. From where I sit and the discussions we have with the banks, we get frustrated because we can see this is very obvious, very clear-cut, it's good innovation, you'll be able to grow leaps and bounds. But when you sit on the other side of the table and understand where they're coming from, because it's my deposit that they're trying to protect, I think we can cut them a bit of slack. So recently came across, there are these guys now, it's becoming a very big thing, where you have AI machines building scorecards for lending. Now, if you go with that to a bank, the bank will say, this is fantastic, it looks very good. But at the end of the day, how do I know what has gone into that for me to deploy my balance sheet against it? So it's not that they're against the technology and the innovation, it's more that their primary thing is to protect that depositor's funds. So they kind of hold back. So it's a bit of a challenge for them. But what is happening also with innovation, the use of sandboxes is actually something that is quite useful because there's an area where they can actually see how it behaves before they actually move forward. But these things take time. So it's not that they're lacking in innovation necessarily, it just takes time because they need to be careful. So that's, I think, is a big challenge in terms of deployment of innovation in the financial sector, in the banking sector specifically. And then with time, once it starts opening up, it grows and they catch on and they move very quickly. So, I think that is actually, even when you look at the lending space, today the biggest lender is a bank on a fintech platform. Because they're actually the guys who have the capital to be able to scale to that level. But it took them time to get there because they were not the first. There were other people that actually came in.
Thank you so much. Wanjiko, you can add a point.
Yeah, allow me to add a point from maybe being from the other side, being a customer of the bank. And I think a simple survey, even sometime my husband did on me and asked me, so with your bank, do you do RTGSs online or you fill the forms? And what do you think was my answer? And he couldn't understand why. And I represent a number of us here. I think there's some prestige in signing. And carrying checkbooks around, isn't it? And I think that's a challenge as customers of traditional banks are facing today. Even when we know it's very convenient to use your RTGS platform online, which I use, and it's so simple. And I wonder why I had to continue to use. But even when I leave, I have to ask whether I have some pre-signed RTGS forms, even when I have my laptop with me. So I think that's a challenge from our end as customers, failing to embrace as quickly the new technology.
Thank you so much, my panelists. I can see time is actually moving on. I want to open now this forum to have questions from the members who have participated. Thank you you've quietly been listening to our conversations. As I said, this is a thought-provoking conversation cutting across matters fintech, the innovations that are ongoing. Because the last question was, what is the future? Where are we headed to? Because every day a new product is coming. But what is the future of the innovations in this space? Anybody, maybe just one word about the future of these, fintech innovations.
Some of the things we're seeing, they're already there, but they open up even more. And there's been terms of people talking about data being the new oil. Mm-hmm. In Europe, you've got open banking. So before, where you actually went to do banking, banking is done. And now I'll be able to say, I want my data from you to be shared with that person so that I can be able to access that service. So it's shifting from where we came from, a point where data was owned by the people who enable that data to be generated. So they owned it. The telco owned your data. The bank owned your data. And that now started shifting, and now it's becoming to you owning that data and deciding how you want that data to be used out there. So if once the power is shifted to us as individual, I mean, where we can go and where we will go, it's actually limitless and endless. We just hope that there will not be any misuse of that data as it is moving around for different things.
Thank you. Divina, what? A minute?
And when that comes, I want to be able to take a picture of my check and it deposits in in the bank without having to do, just put my face, take a picture, goes right into my bank account. Whoever is a bank there, the banking guys here, please start working on that. But I think I'm very keen on seamless experience because I've seen it in other parts of the world, but if we bring it here, I would love a future where you wake up in the morning, you want to go to work, you've ordered your breakfast, paid for it, it's delivered to your office, you find it at your desk, and this is all from digital, by the way. You want to go to lunch, you set up a meeting, go to lunch, your food is already there, you go home, you've already ordered your groceries, you find your groceries have been delivered, and you make dinner, you've ordered for your favorite movie. I think I want a future where fintech technology can enable a life where it's, one, you own the data. So what I want to do with it is my business, but also that it just creates a seamless experience for those ones who have access to tech, but also then for the other guys, for the other world. So I think there's another part of the world, the 60% who have no access, for example, to internet, have no access to financial services. I would love a place where we change the language of banking, where a business, your local business owner, your local mama mboga can also help you access to services if you don't have a phone, for example, where your life is integrated in such a way, it doesn't matter whether you have a phone or you don't have a phone, whether you have access to internet or not, but that you can actually find everything you need around the corner, around your neighborhood, without having to have the privilege of having a smartphone, for example, without having the privilege of, when you talk about access to capital, where you don't have to actually go through 10 loops and hoops to actually access finance, lending, and so forth. I think we need to, I think the future actually is not in the people who are sitting in this room. I'm sorry. I think the future of fintech and payments is for the other 60% that are more than likely not represented in this room.
Wow, that's the future of fintech. The future of fintech. Thank you. I think the conversation has been very enlightening as we explore this space. It's a very wide topic. We now, in future, we are going to scale down to some specific areas so that we can explore them in depth. But I thank my panelists for everyone who took the mic was expounding the topic from the blacklisting. You know, we now know that what blacklisting is all about, you know. I'm like, you know, when I was in school, there's that black book, and you don't want to be in that black book. I think that's where blacklisting came from. So that black book was then a noise-making person or somebody who was on the wrong side of the row. So when in financial, you're like, my name is in that blacklist, I cannot access money. And you know, that's a very big challenge to everyone. I think you have demystified that. So I would like us to have now Q&A. We have questions from the audience, and we see how best we can address your questions. Thank you very much. Many hands are up.
Yeah.
Ask, when you start up, tell us your name, and maybe ask one of our specific panelists a question.
Yeah, so my name is David Mikja, Cadap World Incorporated. I'm new in Kenya, I'm from Sierra Leone. So I'm asking with regards credit reference. I think the challenge is with the central bank of all countries and the financial inclusion directorate under the central bank with regards to ensuring that the digital infrastructure for internal data generation from businesses exists first. And central bank being the regulator for the higher, the commercial banks and the lower segment of the financial sector to tap into that data. Now, my question is to the FinTech Association. How are you working with the central bank to deepen digital infrastructure, digital economy infrastructure, for businesses to internally generate that data, mobilize and collect that data to be available to the central bank for credit reference? Thank you.
So I think we'll take a round of 3. So we'll have one more here and one.
I think it's still a morning. Good morning, everyone. My name is Kelvin Maswai from Stanbic Bank. I know we are not the most liked people in the room, but we decided to come in because we believe fintechs, we are supposed to partner with them. And most banks have been struggling. I mean, it took banks a very long time to know exactly what to do with fintechs, whether they are coming to eat their breakfast or so. But I think most banks have realized. You've seen what has happened in the Asian economy, you know, Grab, what they have done with banks. So I think the future is partnership, innovation, and all that. So actually, as a bank from Stanbic, we've created a whole model, a whole department to deal with partnerships. It's a long journey. We don't know exactly what the future is and how we're going to partner with fintechs, but I think the journey has started. My question on the panelists, I would just open it up, is, of course, I'd alluded to the question in the earlier comments. Where is partnership between, the future partnership between banks and fintechs? Because I think this is where the success will come from. And I would want to I don't know if everyone has read something. I'm not a techie person, but I'm in the technology, media, and telecoms, so I've really had to read a lot. Grab, what they have done. Is in Malaysia and all that. So your comments would be very good, especially just looking at East Africa and Kenya in particular. And then the other question would be, I attended the Tech Summit at Sarita, I think a month ago or 2 months ago. I met people from Nigeria and all that fintech. They were of the idea that Safaricom seemed to have taken over the whole fintech thing. I don't know how true is that. Is it the fact that Safaricom, it's a good thing and a bad thing. They've done a great job. Has it made very difficult for the other fintechs to grow? I saw that sentiment. So I would really be happy to have, an esteemed panelist here and see, is it partnership with Safaricom? Is it, all that? And then the last thing I would want to say is that, of course, the journey we've started to understand the fintech and technology sector. I'll be happy to let you know that Stanbic has the newest technology account. It's called Tech Connect. We'll be launching it in a month's time. So if you're a startup, you're welcome. And then we have, of course, the innovation team to do with partnerships, and our APIs are going to be free now outside. We've taken long, we've taken a hit in the past, but we decided now to come for a try. So come for the API, come for the Tech Connect account. Thank you.
Thank you. My name is Elizabeth Njoki. I'm a lawyer and an associate at Njogu and Associates Advocates. The conversation around fintech is of much relevance in the legal field. And one thing we say about law, or it's a question that we ask ourselves in law school, is does law follow development, or does development follow law? And from this forum, and in particular in matters technology, I think I'm of the opinion that law needs to catch up with development, and particularly in this country, I think the law is really needs to work hard to catch up with the pace at which development and technology is moving at a really fast pace, so that what we have today, tomorrow we have something coming up. Technology is just like mushrooming, it's like popcorn. Now, bringing in that question of law and tech, because that's my concern today. I don't know who exactly to address my question to. I think any of the panelists can answer is, number one, what is your opinion as far as regulation of the fintech space? Do you think you are sufficiently regulated? Okay, that in my opinion would be no. In my opinion, that is no, because it was only in 2019 that the DPA was passed. It took, I don't know how many years for the CBK to come up with regulations. I think the CBK regulations for the digital lenders was in 2021. And since 2022, when those regulations were passed, till today we only have 22 digital lenders that have been licensed, and more than, close to 400, I think there are around 380 something other digital lenders that are awaiting licensing. I mean, for close to 6 months. Why do you think it's a problem? Do you think, what's the issue? Why do you have so many pending applications? 6 months, only 22. Can you? 32. 32, please, sorry? 32. It was, okay. I think 12 more granted licenses the other day. Yeah, yes, that makes it 32. So where do you think is the gap? Where do you think is the gap? The other thing is, from your end, what are some of the regulatory hurdles that you are facing, and what do you think can be done to bridge that? This one is just a general comment. You may also want to say something about it. The fintech area, I think the regulatory framework really has not yet really grasped it really well. We are just all over. We have several players that are regulating the field. We have because I know there is investment involved in fintech, and we have the CMA that regulates investors. We have the CBK regulating financial service providers. We have the Communication Authority of Kenya regulating platforms like M-Pesa, because M-Pesa is a mobile service provider. At the same time, it is involved in this fintech business. So I feel like things are so jumbled up, and we make the danger I foresee is where we come to a point where we have so many regulators regulating the same platform, so that there is no harmony. Understand? So that is a danger that I'm foreseeing. So maybe someone can talk about that how can we, or is there a need for a harmonization of, regulation around the fintech space? The other concern is on, I think the area of handling of data. How much do you go into verification of the data that you get from your users? I will share an experience. Some time back, I got an SMS from some digital lender. I don't even know who were they. I think Mike's or something. They were telling me that someone, hello, your number was used by so-and-so as a guarantor for a loan of this amount, which she's not willing to pay. Kindly pay within. I had no idea what that was about. So I was wondering, how did someone get to use my number to guarantee a loan on a digital platform? I was not involved. I was not aware of that. So those are some of breaches that you may want to talk about. How do you go about verification of the data that you receive to provide credit to your users? Thank you.
I think we'll answer those first, then we'll go to the next round.
Thank you so much. We'll also ask Kevin to address the issue of licensing of digital financial service providers and the regulations. I'll also try to say that in Kenya, we are regulated by the law, the Kenyan Constitution. Now from the Constitution, we go to the Acts of Parliament, like we have the Banking Act. The Data Protection Act is a registration that is coming to the space to actually harmonize the use of data. But when it comes to the regulatory framework, the Digital Financial Leaders Association chairman here can tell us how they're dealing with the challenges, and also say why we only have 32 licensed financial service providers. Kevin, thank you.
Thank you for those questions. I'll start by saying to the lady who's a lawyer, you did not guarantee any loan. That's illegal. If you did not consent or sign any document guaranteeing a loan, it did not happen. What likely happened is that the lender who has your number, the person who borrowed, the lender took their contact details, stored them, and then is now fishing to see which of her friends or his friends will force that person to repay. That act is illegal, and actually you can now report it. The email address is dcps@centralbank.go.ke, and what you do is you share your screenshots, you share the screenshots, and you make the complaint and explain the complaint, and the idea is somebody should deal with that. In terms of, let me start from the regulation that we have, DCP 2021. That process took us 3 years. It started with a member of parliament, I forget his name, but he passed away, that brought it to the floor of the House and then was picked up by the Committee of National Planning and Finance. And that was a negotiated process. The Constitution allows us to have public participation, right? And so various stakeholders, including us, the lenders, gave our thoughts on the initial proposed bill. Now, what are some of the things that we were able to get rid of? So one of the big ideas at the time was minimum capital ratios, which basically meant that to be a digital credit provider, you had to have a minimum amount of capital. The argument we made against that was because we're using private capital, by forcing us to have minimum amounts of capital and statutory ratios, you are making us have to, our cost of capital will be incrementally higher than all the other financial services players because we don't take deposits. Kamal alluded to this. The largest digital lender in the market today is a bank. The reason the banks are able to scale so quickly is because they have cheap deposits. They have cheap capital, your money, my money. And so they're able to scale quickly, but they always come at the end of the innovation cycle. Now, that negotiation, the other big issue was what they were calling prudential guidelines. Another example of banking regulation that's normally given to deposit-taking institutions that we didn't need. The big wins for us were, if you look at the PSP, Payment Service Provider licensing regime that was passed in 2014, until 2021, I think only 5 licenses had been issued. What we did as the stakeholders is we insisted that we should have a 60-day, we should be grandfathered in, which basically means that if I'm an existing lender before September 2021, was it December 2021, I can continue lending even if I don't have a license on condition that by September 17, 2022, I have submitted all the requirements for licensing. And so all incumbent lenders have submitted their documents and who submitted their documents by September 17th can continue lending until they get their license. Now, as you can imagine, the central bank wasn't, and I don't want to blame anyone, did not have the capacity for all 400 lenders at the same time because the regulatory requirements are quite onerous. Each application has at least 400 pages of documentation. And so if you expected them between September 17th and December 17th to have issued 400 licenses, I think that would be impossible, even just from it was the first time they were doing it. The second thing is that they must do a site visit to our offices. One of the big complaints from the customer and the consumer was, these lenders are just digital platforms. We don't know where they are. We don't know where they sit. As you can imagine, again, they have to use a third-party government parastatal, typically the National Intelligence Service, and they have to then come to our site and do an inspection. Right? So again, that is going to take time. And so to answer the question of why is it taking so long, I'm not central bank, so I can't speak on their behalf, but I can allude to the fact that they likely are having a capacity issue, and once they're done with the initial 400, it'll become better over time. The other question that I needed to answer was around what are some of the things we're doing with the regulators. Now, because we are organized, and in fact I should note that Rose was actually the first chair of the association, and when she was working at Tala, she's the one who actually paid for all the legal setup fees and everything. And because we were collaborating from such an early stage, what we have found is that the regulators don't mind working with us because we represent 90% of the market share. So we've got 33 members. We lend about 10 billion shillings a month to 8 million customers as an aggregate of our membership. So as a result of that, if you're CBK, Office of the Data Commissioner, CMA, IRA, you'd rather work with us or talk to us from the get-go to avoid any missteps that could happen. So just to give an example of the kind of things the different regulators are doing, if you've heard of the CMA Sandbox, I don't know if anyone has heard of the CMA Sandbox, right? The CMA Sandbox is one of those initiatives where they are trying to figure out what to do with these innovative ideas, put them in a box, observe them as they sort of do their initial business, and decide what's the best way to regulate this entity without stifling innovation. The company OA I mentioned went through something called the Insurance Regulatory Authority's BIMA Lab, which is an accelerator program for new and innovative ideas in the insurance sector. And every year they pick a cohort of 10 innovative ideas, again similar to the sandbox, give you access to all the necessary people. In fact, those of us that have gone through the cohort know how easy it is to get to IRA and to certain people at IRA, because they've created this environment to enable innovation without stifling it. And then, of course, you've got the CBK. The CBK doesn't have a framework for innovation, but has a very good track record if you think about the last 10 to 15 years. There was nothing, or there was no regulation for M-Pesa, for example. This was a telco trying to take deposits from the public, and they figured out a way. And the governor, who's now the CS, uses the word light touch, which is very similar to a sandbox approach, where let us see the product working in its current, let's see if the product works. If it grows and has legs, let us now then take time to understand how best to regulate it. And so I think for you, as Rose mentioned, I think we've come a long way, and our regulators are actually some of the most, not the most, I think Kamal will disagree with me, but more progressive regulators we have, not just on the continent, but globally. And then in terms of jumbled up, too many regulators, the interesting thing is they too have realized that, right? And so there's a task force that I think is chaired by the governor of the central bank, and all the different financial sector regulators meet, is it once a quarter? I think maybe it's once a quarter, to discuss whatever issues that are affecting the different issues. I think in conclusion, what I'll say is that the DCP regulation is a very interesting opportunity, because as part of the act, it allows the central bank to allow a DCP to do anything in addition to lending if it approves it. And so the Kelvin, who I know, asked about where do banks come in. This is where banks will come in. Banks will never, I don't think there'll be anyone who will have cheaper capital than a bank. Therefore, as a lender, at some point, as you grow, you'll want to partner with a bank to get that cheaper deposit to improve your margin, but also to give your customer a lower price, right? In the same breath, you've got insurance. You've got innovative companies like OYE who do not want to be insurance companies, but want to offer insurance to their customers, and innovative insurance solutions. And so we'll have to have and work with a regulated insurer at the back, which we do, right? And then offer the service through our platform. And it's similar things with even investments. And you're going to, there's a new solution called Dosika, which comes from the CMA, which basically is a fintech that has partnered with a stock brokerage firm that is licensed by the CMA, and they're offering that whole journey of investing in bonds and in stocks. So I hope I've answered that question. Asante sana.
Thank you so much, Kevin.
Yeah, maybe I just add on to one point Kevin made on the regulator. If you remember, Treasury had actually put out a proposal for a financial services authority that was actually going to encompass all these telco, banks, and everything under one regulation. I don't know what happened, but I think that was one angle that was actually quite good to have that single regulation. To answer the gentleman from Senegal on the technology enabling data sharing. So the whole mechanism in Africa has actually been driven by IFC and the likes of FSD Africa, and I believe also USID actually also did quite a bit to help in inclusion, financial inclusion. And one of the pillars was actually credit bureaus. And these institutions have, in very many markets, here included, helped in actually, first of all, doing an assessment in terms of what is that technology gap that is required to be able to enable this to function, to exist, to be able to progress, and have actually invested in quite a number of tech companies to be able to provide that technology. So in Kenya today, it was an issue when we were starting this journey in 2006, and so on and so forth, even for banks to actually start submitting data to the bureau. It took a lot of time because a lot of data was actually kept in different parts of the bank and not all in one place for it to be submitted. But we've been able to progress. And today, 20 odd years later, we no longer even think about that as being an issue. In Senegal, we operate a credit bureau there, and same thing when we started around 2014, 2012, it was pretty much the same thing. But where we have reached right now, and it's a bureau that is actually running across 8 markets. So they have one central bank that covers 8 markets, and we are providing that credit bureau across those 8 markets. And data has stopped being an issue because the technology bit has been solved. So technology has been able to, the investments that were needed to be done have been made, data is now flowing, and the use of the credit bureau is actually increasing in those areas as well in Senegal.
Thank you so much, and I don't know whether all the questions were answered, but I think this one also aligns to, yes? Yes, please.
Sorry, the gentleman in the back had asked 2 questions, and I know there's one that everyone is going to Skype, so so let me answer the one that is easier to answer, the one on collaboration. What is the role of partnerships and collaboration? I think the simplest answer there, I think if we crack it, it's the secret sauce on advancing fintech in Kenya, Africa as a large, because, and this is something that I can proudly say we're very good at, because we as Seduland do not exist without partnerships. We can't. And this evolves from the fact that we work with banks. I know that we've gotten a lot of, people ask, why are we still actually working with banks, for example? But it's because I think early on we realized the banks, if you work with banks, if you work with other PSPs, or we work with other PSPs as well, it's the easiest way for you to scale your business. It's the easiest way to scale access to services. It's the easiest way to, if you want to give a loan or you want to do lending, you don't have to do it by yourself. You go and partner with someone else. I think the more, unfortunately, there's a bit of fear of I partner and then you take my idea and run away. I mean, that's just, generally I find that fear is founded, but also if we don't actually tackle it, it's going to stifle innovation in Africa. But I think partnerships, if we are open to the fact that not every fintech, in fact, not one fintech can give the right access and the right, can give the right scale to businesses and the consumers. If we actually accept that, then yeah, partner with banks. Banks might not have access to the payment services, for example, the payment solutions that maybe Seduland might have, so therefore we offer our payment solutions to banks. PSPs might have access to other markets. If I want to go to another market, the easier way to do that is leverage on the existing partnerships. And I think for the person who asked about Safaricom, and I'm going to take a limb here and tackle it because it's one of those questions that everybody asks and then everybody kind of just hides a bit because they don't want to tackle it and they just dive and say, I don't know whether I should answer this. But I think Safaricom in Kenya, and this is an outsider view, so I'm taking it from what happens and what you see outside of Africa. For Kenya, Safaricom has been a boon. Like, you have to acknowledge that M-Pesa accelerated and really supported Kenya and helped Kenya leapfrog innovation. So we have to acknowledge that. You can't actually just, because by the fact that they've made it easy for money to move from one wallet to the other, they made it easy for you to send money, they've made it easy for you to build on top of the innovation. I think we have to acknowledge that they have actually enabled, not stifled. Now, the other thing, does it mean that they've arrived, right? So I think maybe the question is, what should they do? I think there is an opportunity for them to grow. There's an opportunity for them to collaborate more. But I think the question should not be whether they are stifling innovation, is what else can they do?
Wow. Safaricom is big out there. There was also a question how Safaricom is doing. Is it in Ethiopia, in the new market?
Yeah, so it's the same thing. It's going to be the same, I think the same journey with what we've seen in Kenya.
So I think those questions were covered. I'll read through 3 questions, then I take 1 question from the crowd, then we are done with that. So on credit referencing, I understand the microfinance no longer share data with CRB. Is there a risk that a lot of data from microfinance is not available for analysis? 2, will you help explain what the president has been talking about graduated referencing? And 3, on prestige, people with means want to feel they are receiving more prestigious services, prestige banks, expressway, etc. Is Fintech going to offer this a bit of prestige that they feel they are entitled to? So I'll take 1 more question from the crowd. Yes, then we'll take for the ladies.
Good morning. My name is Stella Kimani from the US Embassy. My question is, when we talk about fintech, there's a lot of talk on digital lending and digital payments. And maybe to cover on the prestige question, what is the effect of fintech on digital wealth management? I know Kevin has alluded to Dosika, but are there more products on digital wealth management? Thank you.
Okay, to answer the question on the Bureau, you know, I'll never forget 13th March 2020, when COVID-001 patient was named in Kenya, and everything started changing. And it was really unfortunate, as much as we talk about data being the new oil, that in that time they thought that data suppression would actually be the best way to protect individuals from any adverse situation, whereas it was actually the direct opposite. It's almost like saying we went through a COVID period, we closed schools, so let's give every student an A so they can progress to the next level. You're just lying to yourselves, you know, you're not being truthful to the reality. So it's unfortunate that we got into a situation where data was suppressed from the Bureau, whereas it was a time when data should have been shared even more to get better insights about the customer, the individuals, so that you could be able to service them better. The whole talk about blacklisting or that, you know, that does not exist, you know, it's a shame because it is the minority. Kenyans in general are very good payers. In the Bureau today, we've got profiles on over 18 million individuals. Majority of those are actually people who pay on a regular basis. Kevin alluded to a point of a product. Fulis are doing 1 billion shillings a day in lending. That is not small money if everyone is on the, I mean, it would not have happened if everyone is on the blacklist or on the Bureau negatively. So yes, data was suppressed to the Bureau. It does limit access to finance for individuals. And yes, we're probably not getting the full picture of an individual, but again, banks still control quite a huge percentage of lending in this market. So we do have sufficient data, but more is very good because we would be able to understand these customers better and be able to service them better. And it actually goes back to the point on prestige. So I would not want to call it prestige, but to be able to differentiate your customers. Right now, there's a big drive within the central bank for introduction of risk-based pricing. We cannot offer risk-based pricing if we don't really understand who you are and where you are, what you're doing. So the more of that data that can be shared, it'll be helpful. With the data suppression, microfinance guys not being able to report, it becomes difficult for lenders to be able to, you know, to go out with their chest and say, I think I trust this person and I can be able to take this sort of risk on this particular individual. That is, however, changing. The digital regulations that came out, and once they get licensed, they are then allowed now to start sharing that data with the credit bureau. So it's, the market is self-correcting slowly and getting back to where we ought to be.
Let me answer the question on prestige and some of the innovations that are around. I'll selfishly talk about branch because I'm seated here and I have the mic. So risk-based pricing, we've been doing it for over 8 years now, and it's something that we're very proud of. So the good thing about being licensed to now not just do lending, we can now do deposits, we can do payments, like a whole array of activities. With the risk-based pricing that we have, we've been able to increase the amounts that we are lending. Originally, we were doing up to 150,000 because we were lending into a mobile wallet. But now, because we have our own accounts, we've doubled the amount to start with, so someone can get up to 300,000 as a first, the maximum that we're currently doing, and we intend to increase that. So from the risk-based pricing that we're doing, I think when we talk about the rates that we have, people get really surprised because the higher the loan amount you're getting, the lower the rate that you pay. And we get people paying even as low as 2%. So forget the 8%, we have 2%. So that's on a light note. But we do actually get to as low as 2% because this is a customer who is a trader. They've been faithful. You can actually see their repayment activity. Now with a wallet, you can actually see what they're paying for. So the ecosystem becomes more and more vibrant, and which enables us to provide better financial solutions. On the other hand, especially on the investment side, which was very surprising, especially when we launched our savings product last year, there was this hypothesis where people may assume that if you're borrowing at the micro level, you hardly save. But we were able to bust that myth because we launched a savings product, and the outcome of it was actually phenomenal. We currently are giving a 15% return on the savings. And these are customers who will put money in. We don't have any restrictions. We pay interest back to you every Monday. So the first message you get on a Monday morning is on the interest that you've earned. So the conversation with the customers has changed. And the partner that we work with for our customer service omni-channel, we look at where exactly are they communicating with us. So if it's going to be social media, they're asking us a question, or within the app, the conversation has moved from, can I get a loan, which was our flagship product, to, I'm saving for this. Please make me understand how the interest is calculated so that I know how much I need to be putting in. And I think that's a very interesting conversation we are having. So we've gone into now financial health. We are training people on, if you want to save, this is the platform you can save with, because we give you two options. Either you save towards a target, or you save towards achieving a particular return. And all based on customer feedback. So Prestige, if you have high value, you can come, put in the cash with us, you'll get the rate, and you lock it in. But if you're a trader who needs the cash back and forth, we have the FlexiSave, take the money out as you wish, because we calculate the interest per day, and we're able to serve that niche as well.
Thank you so much. To avoid being blacklisted, I'll open it up for one more question and one burning comment. So we'll have one question here and one burning comment that had already been sorted out. Apologies, we are really short on time.
Okay, thank you for the presentation. My name is Dr. Cheryl Genga from the WITS Business School, and I have a question to all the panel members. This is basically on data privacy and consumer protection. How do you ensure or strike the balance between the two? Because I think 9 out of 10 people don't know their rights when it comes to sending and lending money. They just agree. So how do you strike the balance between the data privacy and consumer protection?
Let me share something on especially the data protection, consumer protection. And I'll share this from some email we received from the Competition Authority of Kenya, CAK. I think that was back in 2020, because I remember they could not even come to the offices. So they were telling us to send our documents, and they were calling it that they are checking unconscionable information, so that we could send out, they asked us to send out our loan form so that they can see what information is there. What is that fine print that maybe our customers don't get to read, or they just sign and they don't read that. So we had to send all that. The other thing that that parastatal needed to know was our tariff. What's our loan tariff? So, like this bit of hidden charges that we've heard about. So they're also following to check, is whatever you're telling the customer the exact same thing that you're. So, and when you receive an email from that parastatal, you actually know you're in the radar. So the best thing is just to conform. So I think the regulators are doing their bit in my view, because I think maybe I was randomly picked for some reason to be able to offer. And you see, now that helps me to check that everything that I am communicating to my customer, they understand, and I can also be able to take care of myself. Thank you.
So let me answer it in a different way, which may upset some, but we normally talk about data privacy, and the law is there which we comply to when it comes to financial services. However, if you look at the amount of information that you willingly provide into the cloud every day, even right now you've taken pictures. I didn't consent, I've been taken, probably right now they're on Twitter. What normally happens is the information that you're providing to all these social media platforms is still speaking volumes about you. So it's not just about what does the law say, what are the financial institutions saying, but what are you as well doing, what role are you playing, what part are you playing? All, like I mentioned earlier, the apps that you download, do you just say consent, consent? Because the way artificial intelligence and the way we are actually making services to be super seamless, we want you to do the least activity. That's why you'll find you today can control your TV with your phone. The remote is becoming redundant because we want you to do the least mental activity. But within that, what are you consenting to? Because there's an algorithm that has figured out this is how I behave with the remote, this is how I behave with my phone, and so on and so forth. So we on the financial services side will do everything that we can to protect the customer, but you as a customer as well, also be careful in terms of what you're putting out into digital platforms and the digital space, because it can still be captured by various companies and it can still be used. Yeah.
Thank you so much. Yes?
Maybe I'll just add to that, because as much as there's protection, there's also the ability for you to interrogate that data to verify is it correct or not. So it's also open. So as much as you have a part to play. Are you sure you've read the consent on what is being shared or used? And over and above that, are you going back to actually interrogate to see what do they have about you and what are they saying about you to ensure that it's actually correct?
So thank you so much. We'll have one comment. It's not a question, as she had indicated. So one final comment.
Thank you for the insights. It was such a pleasure to be here. My name is Anne Muli. I'm a lawyer by profession. I used to be a banker in charge of recoveries at a bank, and then I left and set up a law firm that specializes in recoveries. So I have about 15 clients who are banks and financial institutions, fintechs, that I deal, and mostly it's on matters debt recovery. So I thought it was just to exchange in terms of the experience I've had while interacting with you. These are things that you need to brainstorm about as we talk about the future of fintech and financial services. Are we protecting the risks that you're facing currently at the business? Because at the end of the day, it's about profitability and it's about creating sustainable businesses. So the issues I've interacted with in terms of clients, number one, we know there's a small claims court, and I'm doing quite a bit of litigation on it. There's a lot of value that comes from that court. Before, matters would take years to get litigated and concluded upon. But nowadays, we have a court that in 60 days you have a judgment, and we litigate for purposes of the people who've decided to take loans and not pay. So because you know where you're employed, we are able to attach your salary. So the problem that I'm having in terms of my clients is, at the end of the day, and as much as you are saying it's e-commerce, it's just a click for you to access the loan, we are working with courts of evidence. So my fintech clients, what evidence are we putting towards existence of the debt? I'm having instances where the customer says they never saw the terms and conditions. What evidence do you have, in as much as you have your forms, what evidence do you have to show that they actually read and clicked on it? Again, these terms and conditions, I've had instances where, because I also do non-court debt collection, I have a call center within the firm. So you've outsourced the debt to us. But then at the end of the day, you didn't have a clear condition on who pays the cost for recovery. So have you had a lawyer review your terms and conditions to ensure that they are comprehensive enough? Again, the terms and conditions need to capture the emerging laws. Now we have a Data Protection Act. We have Consumer Protection Act. Have your terms and conditions captured what is required in terms of consent of the customer? Because at times I get the instructions, and from the terms and conditions, I'm unable to even engage in a court process because I was not allowed to share information with any third parties. So it's very important to have someone review the nature of your terms and conditions and ensure that they are very comprehensive. Again, we speak on matters contracts. At the end of the day, we are creating an ecosystem where there are partnerships. So are your contracts comprehensive enough? You have someone providing systems for you. Is there issues of indemnity in case they mess up and disclose data that they shouldn't have? Is there room for indemnity? Is there room for, in case of litigation or disputes, how do we sort them out? So that those are some of the problems we've been having with our clients, and there's need to have just a lawyer conduct a compliance audit once in a while to make sure you're on the good side of the law, including issues to do, as we say, we have so many regulators. So if the competition authority comes, in terms of your terms and conditions again, were they reviewed to ensure that they're in compliance with the law? So in terms of experience and what I'm doing in the industry, those are things that we keep on engaging, and it's wise, especially the part of evidence. If a client comes, and now we saw the regulations by the CBK have introduced the issue of reduplam. You can't charge more than, when the loan goes into default, your interest has to be up to, it can't pass the principal. So do you have a maker checker for that? Or we'll end up in court and have issues of you charging excessive interest. So those are just the housekeeping issues that I thought it's important for us to reflect upon as we leave the session. Thank you.
Thank you so much. I think you could reflect on that and give us your final remarks as we close this session. You can start from any side.
Okay, so I think as we talk fintech, and I think it was alluded to in one of the questions, is that there's a lot of focus in lending, and yet that space is very big. There are wealth tech, there's reg tech, there's so many things that are out there, and it's growing. In the wealth tech space, we see Standard Chartered actually have a very good, sorry to name a bank, but they've got a very good solution in the wealth tech space and everything. But it's actually something that is growing. But I think as we grow into these things and get into machine learning, AI, data, and all these things, we've got to be cognizant of the fact that we've got to remember where we started, because sometimes we can go very quickly forward building things and forget where it started and what it was for. So I think as we grow and develop these things, the traditional still becomes very important, because we can't lose that out, because we've got to remember where we started and what we are building, and the efficiency. We don't want to forget it and end up with something where we're like, how did we end up here now in this big mess? So what we want to do is enable people to do their banking and their paying, and let's remember that's where we are. Let's not go too far that we forget where we started, and now we find ourselves in a mix that is quite deep.
So I have to say thank you for hosting me. It's a pleasure to be back. I was a student here a couple of years ago, like 2020. So in conclusion, I'd want to say that there's a lot of strides we've made, and it's actually very tangible. You can see from how businesses have been able to grow just from the way technology has advanced. The need now needs to shift, and it's already started, into empowering SMEs, because when it comes to consumer and digital, I think pretty much a lot has been cracked. But when it comes to empowering the small and medium enterprises, we still have quite a bit of work to be done. And then just a call especially to the powers that be, because for such infrastructure to continue, we have institutions like the Business Registration Service being digitized. It's important. It's going to really help a lot in empowering the SMEs. The infrastructure, as we continue laying down the internet cable, as we continue increasing the road infrastructure, all these things are intertwined. And for any tech company to thrive, we cannot work without the fundamental infrastructure being there. So I hope that will continue being progressed as well. Yeah, traditional infrastructure.
Okay, again for me, thank you for the opportunity to be here. Looks like a number of us were students. I finished a program last year, our OMP, and another one for investor friendly in February. So I think Strathmore has a way of calling their own back, and thank you for that opportunity. And my last words are coming from Mombasa and maybe generally from the coast, is that there's a lot of data conversation here, and data is really numbers. They say numbers don't lie. So the analytics that are taking place and taking lending into what we are calling fintech today is because we have to love numbers. And I work very closely with women, and the women SMEs are in a space, maybe not where most of us are, but maybe the ones that I interact with. We do business, and we hardly talk about how our businesses are doing in terms of numbers. We do it more in narratives than the numbers, and I think that's a very big hit, because when it comes to access of capital, then the narratives usually may not be heard, right? So I think it's our work, your work, my work, for us to be able to help these people, the SMEs, at the level that they are, speak the language that is expected by the investor, speak the language that is expected by the lender, and I think then that way we will be able to have a shift of a massive number that can be able to access the capital that you are saying it's a problem right now. So thank you.
I think for me, I will close with numbers. I generally, my work doesn't make sense without data. So I'll leave you guys with some numbers, and then, what you do with that data is up to you. Today, the fintech space, if you look at fintech, it's about, we are estimating that it's a 20 trillion USD opportunity. In Africa alone, if you look at I think it was 2020, this number is 2020, we collected as a continent about 4 to 5 billion in revenues. In Africa, by 2025, could be 2024, depending on acceleration, we're looking at about 30 billion USD opportunity in fintech revenue. So it's growing. So every year it's growing about 10 to 15%. So this is the space where, if you look at the growth rate, if you look at the level of impact that fintech has for our economies, whether you're a business, whether you're an individual, whether you're a country, and whether you're a regulator, for example, fintech, I think, will provide one of the largest opportunity for growth and accelerating growth for economy. So I think this is the place you want to be. This is the place we want to figure out how to make it work. And this, I think, summarizing it into one, we need to collaborate. So collaboration. What does a collaboration mean? It means that for the businesses that are operating in Kenya and they are enterprise level, so they're big enough, how does that company go into another market? How do we ensure that companies can move from one country to another and set up businesses with ease and be able to collect with ease? And then now for the SMEs, again, 90% of our businesses in Africa are small businesses, what we call MSMEs. So if that's the opportunity we need to solve for also small businesses, if you look at micro and small, are actually individuals. So I think we need to go into, we look at the opportunity, we're happy we've made advancements, but let's also look at the opportunity of really accelerating growth by cracking for SMEs in the countries and helping businesses scale so that we can actually capture the opportunity that we see ahead of us. So that's my parting shot. Thank you for having me. Ruth.
Thank you so much. Thank you so much, my able panelists. My parting shot from this conversation is capacity building. Capacity building for our MSMEs in terms of financial literacy. You heard somebody say that they can have loans for as little as 2%. That is the conversation some of these MSMEs need to hear so that they can know how are they getting themselves prepared to access that finance that will propel them to growth. And that will actually address the issue of access. And even knowledge about the legal issues, the consumerism, the consumer protection. Some of us as consumers, we don't know that there are laws that are out there that protect us in terms of data, in terms of even when we engage in our financial lending institutions, we get loans. There are some levels where there are laws that protect us. So even knowledge about the small courts that are settling disputes. Like you are an MSME, you have delivered services and you are not being paid. So where can you take that? Some of them, have borrowed, and then you've borrowed the money, the lender is on your neck, and you have supplied, you have not been paid. So some of them lack capacity on, that, where do I take this one? So capacity building in terms of literacy, coming up with solutions, even as lenders, to train or to educate, and even have counseling about loans. Let somebody be aware of even the cost of capital. At the level where I work with women entrepreneurs, they lack capacity in terms of knowledge of the cost of loans, especially digital loans that comes with ease. You don't even know, what is the cost? You're like, I apply money, today it's in my mobile money and I can start spending, but at what cost? Then you can borrow from this platform and the other platform. So I think there's that space of financial literacy, capacity building across board. And I also echo Devin's point of collaborations, where we have new innovations that are coming to help MSMEs. If they pay through maybe a POS, they pay through mobile money, that data can be curated and used for lending. You can know their transaction history. That leads even to embedded finance. So this conversation can go on and go on, and I'm so grateful that you all have made it to this conversation, and I'm happy for the university having me as a moderator. So I thank you very much as we go out to network and get to know one another. Thank you very much. Over to Mandela.
Thank you so much. A round of applause to our able panelists. So you've been hearing a lot about OMP, AMP, so I'd like to call upon Eunice, who handles the Enterprise Center, to give you a token of appreciation and as well welcome the next station. I beg your indulgence, we'll take 10 more minutes, then we'll be done. So starting with Kinyanjui.
Wow, wow, wow. Wasn't that beautiful? I am telling you the truth. I'll not take a lot of your time. And you know what? Don't leave because there is another breakfast. I am going to reveal, to refill, because I'm sure there are some people who came a bit late. But wasn't that good? Isn't this conversation going actually to give us another program? Wow, wow. My name is Eunice Mudhoni Kimani. I'm the head of entrepreneurial programs at Strathmore University Business School and a center known as Strathmore Entrepreneurship Development and Innovation Center. In short, we call it SEDIC. At SEDIC, we nurture entrepreneurial dreams. I want to ask, who among you has done a program with Entrepreneurship Center in Strathmore? Very few hands. I'm so sad. Very few people. Now let me ask you the next question. If you are actually lending to entrepreneurs, and yet in Strathmore we are nurturing the entrepreneurs, who do you lend to? Because, you know, when they come here, we usually ask them, because we have trained a lot of entrepreneurs, right from the startups, the ones that are acceleration level, the ones that are SME level, the ones that are medium-sized companies. We train them here. And when we ask them, what is your main challenge? They usually tell us access to funding. That's Waringa Kibe of USAID can tell us. They say, even the women, we just trained 150 women, actually sponsored by USAID, Kenya Investment Mechanisms, where Waringa Kibe is actually the chief of party. And they sponsored that program. And the program is still going on. So, and some of the women, I can see them here. So we ask them, what's the main challenge? And they say, it's access to funding. And then we decided, let's do this in this fintech event. Then we ask you, what is your main challenge? And we have been asking. We have seen a lot of the questions that were being tackled here, we got them from you when you are registering. But what are you looking for? Because your customers are SMEs, MSMEs. You are looking for bankable, you are looking for credit-worthy, you are looking for faithful MSMEs whom you can lend to. And even the ones that are enabling the fintechs. A lot of you are actually targeting those same SMEs that we build their capacity here. And since they have been coming here for this training, so what we are doing is that we are preparing them for you. Those faithful customers that you are looking for, those bankable customers that you are looking for, they usually come here for their programs. So we have an array of entrepreneurial programs, I said from startups to very, very established. And I'm happy one of our panelists here, Shiko Wambogo, actually just graduated last year with a program we call the Owner Manager Program, a program that runs every 5 days per quarter, every quarter 5 days. And we have an international module in Lagos Business School. And what we're trying to do as we nurture the entrepreneurial dreams is to make you, and the lawyer has just mentioned it, to create a sustainable, profitable business. Because if your business is not making profit, then you have no business to be in business. And that is why you should come to Strathmore University Business School to build a program, to learn on how you can be profitable, you can be sustainable, and you can build a business that outlives you. So I will not belabor whatever has been said, but when you are thinking about the theme of this event, and of course thinking about running this event, and this is the first one we are doing here in Strathmore, we would like to actually eventually make it a program. And before we make it a program, we develop a curriculum out of that. We usually talk to stakeholders like you. We talk to the people you target. We talk to government. We talk to every stakeholder, so that when we are developing a curriculum, then it is a curriculum that is all round. A curriculum that would really solve problems that are already existing. And so we will be calling you for a lot of this, because of course we were not able to finish everything. But what we would like to do is to make sure that we are getting as much information from you as possible, so that as we develop this curriculum, that will be for you, the fintechs, that curriculum will be able to be beneficial to you. And so we are delighted that you could come. And we are delighted when we saw the kind of registrations that we received. My goodness, we had to stop people. We had to stop people because a lot of people had registered, but since the room we had booked was small, we were not able to allow everyone to come. But what I want to tell you is that if you want to grow a sustainable and profitable business that will actually outlive you, Do not leave before you see our registration desk so that you can take a program. We even have a program that trains your credit officers, empowers your credit officers so that they know how do they appraise somebody for a loan. How much should they give that person? We have a program that will help you as the owner of the fintech and your staff as well. I will not take a lot of time, but I want to thank people that have made this possible. Before I go into thanking you, we have the Chamasoft Limited that has sponsored us for this event. And I don't know whether you have been able to check the YouTube and Facebook. We are actually live. Standard Media Group is also here, so we are so grateful. And so I want to invite the next speaker who is going to take very few minutes, and that is the CEO of the Chamasoft, who is actually an enabler in the fintech ecosystem. That is Mr. Martin Solomon Njuguna. Martin Solomon Njuguna is actually our student taking the Owner Manager program here, which targets the CEOs of medium-sized companies. And he's actually the class president, imagine, of that program. The program just started this month of March, the 13th class, because we do one class per year. We started in 2010. We are now in the 13th class because we just do one class per year. It's a wonderful program. If you call yourself a CEO and you have not done the Owner Manager program, I don't believe that you are a CEO. So you have to come and do that program. As Martin tells us about the Chamasoft, which has actually sponsored the live streaming of this event, who has made it possible for us to be seen by the whole world. We are so grateful. You can also mention something about the Owner Manager program. And for that 1 week, what did it do to you? And what are you doing in the fintech ecosystem? What is your contribution, Martin? Welcome. A round of applause.
Thank you very much. I don't know how to present after Steve and the team. Someone who went and bought a bank, Rose, bought Century. So how do I present after all these great speakers? Divine all the way from Burundi with a very big company. Konyiha, you have all our credit information here. So you know who has the loans and who's not paying. Maybe I'm one of them. So asanteni sana. I will not take a lot of your time. My name is Martin Njuguna, and I'm the founder and CEO of Chamasoft. And I see some of my clients in this room. And I just want to I want you to come with me on this journey that we've had the last few years. The journey of growing our company. I don't know who has the... Yeah. So we started this little engine called Chamasoft, and we don't know what we were doing. And that's why the title of my talk is the little engine that could. So in the beginning, we started off by automating my own group. I was invited to join a chama, and I saw the way we were spending a lot of time to just talk about who's paid, who's supposed to be fined, all the way to 1 a.m., 2 a.m. And we decided to get out of this chaos, so that's the way it used to look like, although this is not my particular group. Then we decided, do we do something and come up with a very small way of transforming these particular records from paper-based to Excel. Then from Excel, can we transform that to a small database? And we did that successfully for our small group. And our small group was not so small. We were 50 guys doing 25,000 shillings a month. The group is still there. And some people are not within Nairobi, within Kenya. So you can imagine if you're all putting money in the same bank account, the kind of reconciliation that requires to be done by the treasurer. So that's the problem we set out to solve. And that is what we had as Chamasoft version 1, which was very complicated, as you can see, with all sorts of reports and a very huge dashboard. And then we went ahead and started thinking, are there really other people who have the same problem? And therefore, we started reaching out to people on Facebook. Please go to the next page on Facebook, and immediately we put up a link saying that we have a product. We didn't even have a website, but we said we have a Chama software. So we just call it ChamaSoft. So we put it up on, we put a banner on Facebook saying we have a product, and all of a sudden we have 400 guys who signed up, and they said, where is the product? How much are you charging for it? We would like to pay. We have the same issues with our records. Our treasurer is very busy. He doesn't give us, records and all that. And what happened again was that now you have so many guys who are coming to us. Some even started coming to the office saying, can you take us through a demo? We have our book, which has all these records. And all of a sudden, we decided we need to do this formally. So we formed a small team. And this team was led by a gentleman called Edwin. This team would then go and visit groups and then show them the software we had for my group. And then everybody was like, oh, this is very complicated, because our group was a bit advanced, and it had bankers in it. And what we also found out is that we had just copied what the other bookkeeping softwares do, like QuickBooks. So it was a very complicated software, and we had to really start rebuilding. Go to the next page. I wish I had but it's fine. So once again we launched this, version 1, we had a lot of issues, a spider web of issues. That is a lot of support requests. We had, yes, now we have signed up about 50 groups, and they're asking us, oh, our records are not okay, I cannot be able to generate a report. And I remember every lunchtime, our software used to crash. Because remember, we never used to have, we didn't know we would scale. Remember, we had just done it for one use case. So you have groups who are signing up, and if we exceeded 100 guys who are over there lunchtime, the system would just go blank. So we have a lot of support requests. We would like to be able to integrate with a bank. And then we are 100 in this group. How much are you going to charge us versus our family has 5 siblings, and we are still using your software. Why should we pay the same? So those were the issues which started coming, and now we started thinking, how do we go about all these issues? Now, we had to rebuild again, which was very difficult. Actually, I remember 3 developers resigned because they were so attached to the code base that we had developed over about 8 months. And then they were like, no, how can we throw away this beautiful software? Because we can just keep on, adding modules to it. But we sat down and we said, you know what, for us to give a good experience, to have 500 groups, 200 groups, we need to really rebuild our software from scratch. And that is what we did. And therefore, again, we went into a new territory. Move to the next screen. And the new territory was, now all of a sudden, we have a bit of, people have started doing some bit of word of mouth, and we're having some press releases. We went to a few conferences, and we got a few awards, like Connected Kenya. We won the Fintech Award. We did a bit of thing with iHub, a bit of competitions there. So the word was getting out, and we thought, how do we get more customers? And we are such a small team. We are just 4 guys. So we decided, why don't we approach banks? That's a very long story I have, which I cannot say in this room. There are many bankers. Some who are decision makers and my partners, there I see them. But we broke new ground, and we got our first white label in Kenya with one of the big banks, and that gave us a very good insight into how corporates now see our platform. Now again, remember, we had done this for individual groups. We have several who are using it across the country. You have calls from Kisumu. You have guys who are traveling from Eldoret to come and bring a check of 5,000, but they just want to see whether you really exist. They were not coming because of anything else. I remember there's a group who've been with us. There are 254 women from the US. They are called Kwitu, Kenyan women in the US. And when they came to Kenya on a certain December, they came from the airport to our office at 5 p.m. just to know, these guys who've been holding our data, are they really there? So, and then we obviously did, this product was becoming better and better. And then again, next screen. So we started thinking, if we can partner with such a big bank, possibly they are also good ways in which we can partner with guys from other regions. Yeah, we are talking about Southern African region, West African region, and so we partnered with somebody from Nigeria. Sorry if you're Nigerian and you're here. Okay, and our contract was built on sand. And the rains came down, and the weeds blew, and the floods came, and great was the crash that we had on that contract. But within 4 months, we had 400,000 users in Nigeria. Unfortunately, and we partnered with a bank called Bank of Industry. But our partner was not very okay, or our contract was not very solid. But we were able to part ways, and he took away all the customer data, started replicating our software on the other side. And yeah, so we've been through a bit, and we will still go back to Nigeria, but now we know better. But the customers, at least it validated that, first of all, our software could scale. Our software could be used in marketplaces. We integrated with the BVN numbers in Nigeria with that particular bank. So we did a lot of the enterprise development, which actually now has helped our value proposition as a product to banks. So right now, we see ourselves like we are developing our platform as a service. We have several banks and NGOs, including RTI USAID, who are on our platform, and they use this for the groups who they are doing capacity building, trainings, and all that. You have different banks who are using it. I heard you guys talking about the Hustler Fund. We are enablers of that with KCB. So what I would like to say that now where we are, we're going to move very quickly to the regulated space, whether we like it or not. So, and I think I would really like to have the lawyer, I didn't get your name, as Anmuli should be the regulator in Kenya, because she really understands the issues for the customer and how quickly we need to move. So we see ourselves developing, and right now we are developing different tool sets to be used by individuals, because you have individuals who use our platform and they have different groups. They also belong to circles. We have a circle product. So this is what we are developing now. We are developing products for individuals, chamas, circles, SMEs, and obviously the government. Because when it comes to, today if you wanted to access how many circles are there in Kenya, they are all different kinds of organizations you need to go to, yeah, depending on the circle size, how they save etc. And then you will also have like all these groups which are being formed. Today, if you want to lend to a group which is in Hustler group, who do you validate against that this group actually exists? It's not a limited company. It's not an individual. An individual will just check the IPRS. How do you validate that? So we see ourselves as guys who've taken like advantage of that space. It's a bit market right now, but we will do it. And then obviously we will need to work with different players, the banks, the microfinances, to develop different savings products, to develop insurance products, so that when we approach branch can be able to own lend to our customer base. So we need just to do a connection. They do what they do. We are not in lending. We would like other people to come and lend. We would like the microfinances to tell us, have an API or have a button there, and then people can save in this particular microfinance, and then they get 15% or whatever. We are not interested in keeping the money, but we are slowly being forced. We are slowly being forced to go into that space because unfortunately today in Kenya we do not have like an API which gives me access to all banks, and we don't want to dictate to a customer. You can only integrate Chamasoft or have an account at, we have like 3-4 partner banks. So what if I would like to bank with somebody else? I don't want to bank with those ones. So we haven't had somebody who's built that. And our friends like Cellulant who have APIs for that, then they start charging the chamas at 3%. The people who are in chamas are very financially savvy, so they do not want to lose. They want, if I send 1,000 shillings, that is what will be recorded by the treasurer. If I use your API, you know what will happen? They'll get 3% less. So we are not able to utilize that to then send money to the banks. Therefore, we are forced to do some other direct integrations, which are quite expensive to us and to the customer. PesaLink and the rest. So next slide. So for us to really succeed, to become a platform as a service, we need to do those partnerships. We need to do geographical expansion, have financial products from different players, even have other people who are serving these particular markets. If you're selling land, if you're selling houses, how do we work with you for us to be an enabler to you or to be a marketplace for your customers? And then obviously make business sense. It should make business sense to us, to you, and to the customer. And then now we are no longer driven by, we can code, therefore let's do a product. It is now what the market wants. So you go to the bank and the bank is telling you, yes, you have a good platform. It's very good for our users. What is it for us as a bank? We need to see insights. We need to be able to use your intelligence and then be able to lend or be able to pick out and say, Steve is not a customer in our bank, but we can see he's saving a lot within Chamasoft ecosystem. Then they are able to reach out to you either using a bot or actually physically and tell you, we have this particular product and we would like you to open an account with us. So we want to do basically market-led innovation partnerships. And then obviously by design, we'll have to become regulated. When we do white label, we can either host it for you, you can host it for yourself, but then the question becomes, the customer knows us. Yeah? So who owns the data for the customer? Who gives what to the data protection office? So that is where we are as a company. These are some of our partners. KCB, of course, the government of Kenya. Equity has been our partner, and I can see Mike. I don't know, I saw Mike somewhere. Thank you very much, Mike. So we are working with him and his bank in 3 countries, Kenya, Uganda, and Tanzania. We have had very good success. And now that has been our roadmap as a company, and that is our story. Thank you very much. I have not said anything about OMP. Yeah, so I'm currently a student here. I came to apply to become a student 3 years ago, picked the forms, went and filled, kept them somewhere. Came the next year, filled the forms, kept them somewhere. COVID came, I'm not going to school. So my wife came and paid for me the program, the deposit, and said, you have to go to school. So that's why I ended up here, but I really like it. We've just finished our first week, last week, and I don't know how they conspired. They elected me the president of the class. And we really are gelling very well in the class because we've met different people from different sectors. Actually, we are only 2 from software. I think you've done the program. So then you have a lot of guys from real estate. You have guys from manufacturing. And I see a lot of businesses already being done within the class. So it's a very good place to do networking. I think I've already gotten my worth, the worth of my whatever we are paying for the fees within that particular week. And yet we have 3 more weeks to go with a module which we'll do in Nigeria. So I hope by the time I go to Nigeria, I will have the muscle to do the right thing and build my house on a rock in Nigeria. Yeah, so yeah. So it's a very good program. Yeah. Don't ask me hard questions, but you can, just a few.
Okay. Any question for Martin? Maybe 1 or 2?
Thank you so much. I am interested, now that you've said you're an enabler of Hustlers Fund. Now, have you thought about the table banking? Because it is a huge opportunity for you, because many of us, like for me, we have a portfolio of around 10 million in our table banking under Joyua. So maybe you can talk about it. Thank you.
Okay. Can I answer as the questions come? So we save time. So thank you very much. So one of the key drivers of traffic to our website is the word table banking. If you do table banking right now on Google, you will go to our website. We have a lot of groups that we are automating, because what they do, they basically give money on the table. Some money goes to savings, other money goes to lending, but they use our platform to do record keeping. I think this is where we need to partner with Rose and Wanjiko and the rest of the guys who are able to keep the value. Because one of the reasons why we give the treasurer a lot of work, we don't have an end-to-end solution. You just record if you don't have one of our key partners, one of the banks. But if you're able to partner with different players in the ecosystem, then you can just see your money where it's seated in the bank and whenever it's deposited, then you're also able to draw it. So yes, we have a lot of table banking people, and I am with Tiffany from my team, and she's going to come and see you, and I'll also see you. Then we sign you up.
One last question.
Yes, sorry. So, Martin, I think I'm from Sierra Leone, and I work in Nigeria as well with the government. We do a project with the central bank at centers of excellence in 3 universities, and one of them gives us 140,000 clients. And so we'd love to partner with your platform, but for SMEs, our work is to help businesses in Africa export. And so we'll be interested in knowing what your platform as a service is and how we can embed in Sierra Leone, where we will have a microfinance bank, in Senegal, in Nigeria, and then here in Kenya as well.
Given our past history, you'll have to see my lawyer over here. I do not trust people from that region. I just listen to their music, and that's it. So yeah, we will talk about it. Yes, thank you.
Thank you, Martin, and this is a great thing you're doing. I know one of the biggest challenge in all these platform as a service is the issue of your money. Okay, first of all, SACCOs generally and credit unions, or people always fear that the person will disappear with my money. So that is one big, huge challenge. But also the other challenge from just the perspective that you have the platform as a service is the risk that the technology will not work. What are your comments on these 2 issues?
Okay, thank you very much. Meanwhile, the guy at the back, please put our contacts page a bit. So, first of all, we don't keep your money unless you want us to keep your money. I hope there's no regulator in the room, so we keep a bit of money for those ones who want to, but in the process of getting, regulated on that space. But you keep the money where you want. If you are banking with cooperative bank, equity, KCB, we are able to tell you member X has deposited 20,000 to the account. We do not hold the value. We don't hold the value at all. But for a few groups, we hold a bit of value on an aggregated payee. Yeah, but that is something we really discourage because we don't want to go into that wallet business. It can go south anytime. So, and in case banks and microfinances are not going to enable us, then we'll be forced to go into regulation and then therefore keep the value for the customers. But for us, we see ourselves as provider of the software. Number 2, the second question was on? Oh, the risk that the platform disappears. So, so I don't know what you're going to do about it. That's why you're going to join Steven's, body of fintechs. So at least if we disappear with all your money, then you can be able to go to the Fintech Association and say, where's Chamasoft? So obviously from a tech perspective, we've really done a lot. We get a lot of people, we are going to hack into your system, send some money, and we say, by the way, you're very late, please hack it. So that's the way we've made it very strong. By working with banks, they have really checked our technology, our security, and we always keep the software platform updated and even where we host the data. The question actually is becoming harder. The moment we start keeping people's value, then we need to bring down our platform from the cloud. And obviously that will also increase the costs, just like the way banks and microfinances do. Yeah.
Okay, I think...
So our contacts are there. So, yeah.
Another round of applause for Martin. I want to call my colleague Raymond. Raymond is actually the academic director for the family business, to come and gift Martin. He's your student. You taught him last week, and you have asked him the hardest question. So come and he's our sponsor for this event, imagine. So can you gift him? There in the middle. Thank you, Raymond. Thank you, Martin. Thank you for powering this event. Thank you, Chamasoft. Thank you so much. Okay, so I now want to give the vote of thanks so that I release you to go and network. I know the entrepreneurial journey is usually very lonely. You are usually very lonely. Thank me for bringing you together. Otherwise, you have been so lonely. When did you last go to such a meeting? You've been lonely, alone in the office, alone with all those challenges, but I decided to bring you here so that you can network. Because you have been so lonely, isn't it? So the next time we develop this curriculum for the fintechs, ensure you come so that you stop being lonely. And many other programs that Raymond and others will be developing. So I want to thank all of you. And I want to start with the Strathmore University, and of course, Strathmore University Business School Management for allowing the Strathmore Entrepreneurship and Innovation Center to run this event today. We are so happy, and Raymond, you can take that information to the Dean that we are so happy that we were allowed, and actually our Dean was here to give the opening remarks, and we are so happy for the support. We also want to thank our speakers, starting with the keynote speaker, Mr. Kevin Mutiso. Thank you so much. You have given us a lot of information, and definitely for sure, even as we think of developing this curriculum, we will really be consulting you. Thank you so much. And for those that are not members of the association, you can see Kevin, because you will be alone outside there. So it's good that you join the association. And of course our panel, very able, powerful panel. Starting from Mr. Kamau Kunyiha of Credit Info. Thank you so much. Thank you for making time. It was actually not easy to get you because you guys are usually very busy. Mrs. Wanjiko Wambugo, thank you so much. Of Ecobis and of course Nyali Capital. Thank you so much. Mrs. Rose Muturi, the CEO of Branch. Thank you so much that you could find time. Mrs. Divine, I do not know your second name. It's so difficult. From Seruland. Thank you so much. And of course, our moderator. Our moderator, we took a lot of time thinking about the fintech ecosystem, developing the concept, making sure that we get the approval from management. Thank you, Ruth Kenyanjoy. She's one of our faculty here, and she has worked a lot, even to make sure that all those questions that you asked when you are registering, she was able to analyze them and of course pull them out in order to give our speakers. Thank you so much. Our sponsors, Chamasoft, thank you so much. We are so happy. For the airtime that we have given him, by the way, he paid a lot of money for him to get a chance to stand here. So next time it will be you. So thank you, Chamasoft. And then, of course, the Standard Media Group, thank you for covering this event. And, of course, the participants, the fintech owners, the enablers, the lawyers that are here, anybody that is here that is actually participating and, of course, touching the fintech ecosystem, we are so grateful that you could come. Thank you so much. Let's clap for each one of us. And, of course, the department which I head, the Entrepreneurship Development and Innovation Center, and the events management team, the marketing team, the IT team, the cafeteria team, all those people that have supported this event, we are so grateful. Thank you so much. And of course, our MC of the day, I don't know where he is, Mr. Nelson Mandela. We can clap for him in absentia. I think he must have gone to another event. We are so grateful. very, very grateful. I know we've taken more time than we intended, but we are happy that you could make time. So we still have food items outside there that you are taking in the morning. We have some mandazis, we have some guaches, we have some tea, we have some sausages. So as you do that, please ensure that you network with each other, and you also pass through our registration desk in case you need any program. Because here in Strathmore, we are one-stop shop for all entrepreneurial programs. You have no business to be in business if you're not making a profit, and if you're not building a sustainable, profitable business that can outlive you. Thank you so much. I want to release you with the blessings of the Lord. So you can stand up, we say the word of grace as we move out. And now may the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit be with us now and forevermore. Amen. Thank you so much. Let's go out, network, even as we take our tea and snacks.